Hello everyone, welcome to another live stream. So new schedule. Okay, let's talk about it again because I know some of you may be confused. Also, let me adjust my AC because it's pretty hot. So new schedule is out as far as live streams go. To find it, you need to go to A1 Trading live stream schedule. So we have a new calendar built in. Okay, this is pretty cool because it automatically adjusts according to your time zone. So you can see today I'm starting, James is after me, then it's Alan, then it's Nick, then it's Alan again, then it's gonna be okay, then it should be me after Alan. Okay, and yeah, then it's gonna be Tiger. So it's kind of a mess right now. We're still working on it, but it should be fixed pretty soon. And I'm loving this new format. Okay, getting into the markets. So again, if you have any questions, any comments, concerns, put it in the comment section. Talking about metals first, because I know that's the hottest thing pretty much. So silver and gold. I did have a trade on silver. I got stopped out. So I got stopped out by a couple of points and then it went up. Pretty unfortunate. Almost stayed in, but I'm not looking to re-enter. Personally, I tried to go in. I tried to get in on a buy position. It didn't work out. I will not chase this market. Okay, I won't chase the market because, in my personal opinion, this is still very much, both silver and gold, they are very much still stuck in a range. Okay, so you have this 55 level right there, and then you have the 200 EMA. Okay, so the 55 level and the 200 EMA. Inside of this, it's pretty much no man's land unless we can break out the resistance or break the support. So yeah, I did try to take a stab at it. It was mainly a bet on selling the US dollar. So last week I was really bearish on the US dollar. This week, not so much. So this week I did kind of change my view. I've started to maybe even become bullish. So I think some things have changed, and because of that, I'm not looking to really re-enter this position. Okay. If we jump onto gold, so let's just hide this because I don't even want to look at the stop hitting my or the price hitting my stop by just a couple of points. If we flip to gold, same thing. So there's a big correlation between gold and silver. Okay, when gold moves up, silver moves up as well. When gold moves down, silver moves down as well. The difference is the volatility. Usually in percentage terms, gold moves by 1% and silver moves by 3%. That also comes down to the price. So gold is priced at 4K per ounce. I think that's the pricing. Silver is $60 per ounce. So the number is much lower. That means the moves in percentage terms are much greater. Okay, so you can see on the day, like gold is up 1.5, silver is up 4.66. So there's a kind of a multiplier of 3x, you can say, a 3x multiplier when you're trading silver in terms of percentage. But for gold, it is the same thing. We are stuck below this support or above the support, above 4K, big round number, big psychological level. And what is it with these glasses? They're kind of foggy. And we are below the 200. Let me just also... this is better. Okay, and we are below the 200 EMA. Now the 200 EMA, major resistance. Okay, major resistance there, and a big problem. So we can very easily get stuck in the range. The price can very easily just range around this area, which means if you have buy positions running or sell positions running, you'll get chopped up. So you'll take a lot of losses. You'll go into an unnecessary drawdown, and it won't be a pretty story. So my best advice, wait for a break. Wait for a break of the support or wait for a break of the 200, right? there's better things to trade out there. There's some more volatile, more interesting things. Gold just seems to be dying at the moment. The volatility is very low. It seems to be getting flat. It seems to be in this triangle. So yes, you would expect a break out of the triangle. That is correct. But I'm not seeing much activity. What looks a bit better though, and I can't believe I'm saying it, but what does look a bit better is crypto. Crypto is actually pumping, if you can imagine. So the Saylor news, the news about MicroStrategy, if you don't know who Michael Saylor is, if you don't know what MicroStrategy is, you are living under a rock. But basically, MicroStrategy is a Ponzi scheme company where their whole spiel is built on the price of Bitcoin. So it's a leveraged bet on Bitcoin. If you buy MicroStrategy, you're leveraged like 5x or maybe even 10x on the price of Bitcoin. So right at the bottom, we got some concern about MicroStrategy, and it looks like that was the bottom. Now we are bouncing up higher. Ethereum looking even better. I am holding some long-term positions on Bitcoin and Ethereum, which I bought in 2025. I think I bought them in May or June. When did I buy them? No, sorry, it was here. So it was in November 2024, actually. Yeah. Personally, I would like to get my money back. So for those long-term investments, I'm looking to get a break even or maybe exit at 100K and then put that equity, put that capital into trading my general account, because I want to build my personal account. That's always the best way to go. And I don't believe Bitcoin is a lottery ticket any longer. So if you think about it, buying Bitcoin at 20, 30K, it was a lottery ticket. People were saying it can go to 100, 200, 300K. And it absolutely still can, but if you buy it at 100K and it goes to 200, you doubled your money, fine, but it's not a 10x return like it was a couple of years back. So do I really want to tie up capital in crypto? No, I would rather trade it. So what I would rather do is first wait for a break of the 200 EMA, get my money back, and then if we get another bull run, you can just trade it. Okay, so you don't need to have capital locked in crypto as a long-term investment when you can just short-term trade Bitcoin, right? Using, I think, most brokers offer it, like IC Markets, Interactive Brokers, DarwinX. Most brokers should offer it. Most prop firms offer it as well. So if we do get another start of a bull run, it's gonna be a good one, and it's gonna make sense to buy the dips, and I will be buying the dips, and I will be using the Edge Finder. Okay, so the Edge Finder, if you didn't know, also has Bitcoin. Let me show you. Bitcoin. Neutral at the moment, but this could very easily flip bullish once we break the 200 EMA. Okay, so I'm going to heavily rely on the reading. I know Nick made a bunch of money on Bitcoin in 24 and 25 during the bull run. So I think, using Edge Finder with Bitcoin, a great recipe. By the way, there's a massive sale running on the Edge Finder. It is the biggest sale of the year. Okay, it's 45% off. So if you want to get the Edge Finder, the link is in the description of the live stream, and you can use the code Marco to get 45% off. So yeah, do check it out. It's an amazing software, and the link is in the description. So that is corn. Just to finish my thought here on Bitcoin, I think if I had to give you a bias, it would be more of a bearish one, if I'm being honest. Just a small case study, okay? Just a small case study here. Look at all the previous bear markets, like from the peak to the trough, 77% drawdown, and then a massive flat period of a few months or maybe even a year. And look at this. This is 2017. I actually bought the top right there. I bought it in, I think, January 2018. That was one of my first trading positions, and I think I lost 300 euros, something like that. Anyway, drawdown 84%. 84% drawdown. So the current drawdown is only 55. Only 55. So I think we still have some ways to go. I would not be surprised if we hit 40, maybe even 30K. At that point, to be honest, it does become a lottery ticket again. At 30K, buying it as a long-term investment, it's not a bad price. If it goes to 200 or 300K, you can 10x your money, and yeah, it's not a bad proposition. But buying it at 100 as a lottery ticket, I don't think it's a good play. I think a much better play is short-term trading it when we get a new uptrend, when we get a new bull run. Okay, I'm seeing a lot of gold, so let's revisit gold. Gold is starting to push up, so it's starting to catch a bid, but I think we're stuck. I think we're stuck in a box. 4K is a major level of support. Okay, 4K, major level of support. 200 EMA, major level of resistance. So we just cannot seem to move out of this. We need a new catalyst. We need a new theme. We need the market to really commit as far as the US dollar goes. If we get a bullish or bearish bias on the US dollar, it will play out on gold. So a bullish dollar, gold goes down. A bearish dollar, gold goes up. Now, gold hasn't really been cooperating with that because the dollar has been pretty weak the last couple of weeks. But if we get a clear commitment, if we get the Fed to pivot to being dovish, or we get the Fed to being aggressively hawkish, hiking rates, that could be the catalyst that we need. Or if the Middle East escalates even more, if the strait remains closed for months, that could be a pretty bearish catalyst for gold. Because inflation goes up, Fed needs to be hawkish, Fed raises rates, that's a bad story for gold and a bullish story for the US dollar. Let me just grab my link in my files because I want to suggest that you guys join the free Discord. Okay? So, in the comment section, you have a link to join the free A1 Trading Discord. So you can join for free. You can even become a paid member later if you choose to do so. If you become a paid member, you get access to Nick's trades, Chris Pulver, Iwind, Alan, and me. So you get, 4 or 5 really successful traders all in one Discord. And it's not just us. It's people like Sluggy. It's people like Max. Those are the guys that are actual traders, actually doing prop firms, actually making money from prop firms, making money from personal capital. So it's not just sort of SMC ICT bullshit. Okay. Let me see some more comments. Max, hello. Good morning. Max says, loving the BTC attempt to break. It is interesting. It is definitely interesting to note. So Bitcoin has started to look a bit better. And also what is interesting as well, stocks are selling off. I mean, not today, but stocks are not looking so great. Is it a rotation? Is it people selling US stocks going into crypto? It could be a rotation. It absolutely could. It has happened in the past. So that could be something to think about. But I think the market has not yet capitulated. I think it hasn't reached that crucial bottom where everyone says Bitcoin is a scam. We're just going to sell it. Well, it's never going to go up. Okay, let me just also... Is there a way to send the link here? Let me see. Plus. Okay, let me just send the link to James. Okay, because James is coming on right after me. So Nick, good morning, welcome. I think Nick is driving to work, so that's pretty fun. Fun to see him join. Can you check gold? Why is gold going up? Nick from the bathroom. Buy copper. Gold is so weak. Is copper looking better? Let me see. So let's see, copper. Well, today it is. It's having a big update, and it does look better than gold and silver. So that is correct. Although personally, I don't really know much about copper. I've never traded it, and I don't think my edge is really high. Let's run it through the edge finder. Neutral, that's another issue. You know, with something that I'm not familiar with, I'm especially relying on the edge finder, okay? Let's see, copper. Platinum. Copper does look the best. I have to admit, copper does look the best, but it's just not my thing. You know, I don't know much about it. I've never traded it, don't have a lot of experience. So definitely hesitant to just jump in. The price action is still choppy. It does look the best out of all of the metals, but it's still choppy. So I would like to see a break of the resistance at least. Is it an all-time high? Should be. Let's see. Yeah, I think it is. I think it is. Should be. So a break into all-time highs would definitely help. It could clean up the price action a bit. Exit gold and save money from Warsh. NAS 100, GEP pairs. Can you have a look at EuroCAD, USD CAD? What are the odds of coming back to 4,700 till the end of the year? Feels weird watching this at 6 p.m. Hello, everyone. Welcome. We have big earnings this week. Yep. So Google is tomorrow. Let me go to my stocks page. GOOG. Next earnings report tomorrow. Okay. So yeah, pretty important stuff. A lot of earnings coming out. I think, so I'm not sure where, maybe Earnings Whisper? Earnings Whisper? Let's see. Accept. Yeah, I'm not sure. Also, let me just go grab a glass of water. I'll be back in a sec. I know Earnings Whisper used to have a great chart, but I can't find it. So anyway, the summary is the calendar is full. The calendar is absolutely full with earnings this week. Should be pretty important, especially if you're trading individual US stocks, which I am. But the key with the strategy that I'm doing, which is a simple breakout strategy, the SPY. So the SPY needs to be above the EMAs. It needs to be above the 50, above the 20, and above the 10. If it's not, it means that it's in a clear range or in a clear bear market. So the breakout would most likely fail. And I think I'm running some positions as well. So Best Buy, I'm in Best Buy, I'm in Crocs. I think I got taken out of KRC. Yeah. So running 2 positions at the moment, and see, things are just not working out. Breakouts are failing. The SPY is in a range, so the SPY is not looking so healthy at the moment. Not the best story. For this strategy to work, and to be honest, for most strategies on US stocks to work, you need a market condition like this. So you need to have a clear uptrend. See above the 50, above the 20, above the 10. This is horrible. This is horrible. This is horrible. This is amazing. Okay. So this period from April to February was just amazing for stocks. Yeah, if you were trading them during this period, you would have made a lot of money. If you were trading this particular stock breakout strategy, what you can do in this market condition, you can short if you know how to do it. Personally, I'm not an expert in that. I do tend to stay away from shorting stocks, but you could try and short the parabolic stocks. So basically the stocks that go like this, flat, and then explosion up, and then you short, okay? And then it drops back to the previous level. Let's go back to the comments. Schiff is the perfect inverse Kramer for crypto and gold. Okay, I'm not sure who that is, but I do know who Kramer is. Your opinion on EU? Copper is used every day. Gold is a waste of metal sitting in lockers. That is true. Copper is used in the industry much, much more. But I still think you need to be knowledgeable. You need to do a lot of back testing and even forward testing to start trading a new metal. You know, and copper does look good as far as the chart goes, but it's still pretty choppy. It still looks pretty flat in the short term. So if it can break the ATH, as I mentioned, could be much better. The price action could clean up a bit. Okay. Gold, silver, stock box. Okay. So yeah, if you're interested in US stocks, if you want to get the edge finder, but for stocks, we have the stock box. Okay. So any sort of a stock that you're looking to buy, again, I would highly advise to only be a buyer of individual stocks if the S&P is in a clear uptrend, if the price is above all of these EMAs. But an extra confluence is this. So let's take a look at GOOG with a score of 5, bullish score, earnings coming up. You know, you're going to get the earnings report here. You'll get all of these numbers to populate after the earnings. So there could be a trade in there. But personally, I would rather wait to buy once we break higher on the SPY. And then the stars align. You know, you have the stock box going bullish. We don't know the next earnings tomorrow, but let's say they come out bullish. You have the stock box coming out bullish. You have the earnings bullish. You have the SPY in an uptrend. It's a good story. So if we go to GOOG, it's kind of flat. But if it does break out of this resistance, it could be good. Okay. A break of resistance would be nice. So if you're looking to get the stock box, I believe it's the same discount as with the Edge Finder. So the biggest discount of the year, 45% off. 45% off with the code Marco. The link to the stock box is in the description of the live stream, or you can just type in A1 Trading Stock Box. Okay, here it is. See, so you can click the link, or you can go to your browser. Silver is a good buy under 55. Gold is a bad buy above 3K. I don't agree with you there because the correlation between gold and silver is massive. They move in tandem. If you're bullish on gold, you're bullish on silver. I've never heard a trader that was, maybe in the very short term, but I've never heard a trader that was bullish on gold and long term and short on silver long term. You know, it's a pretty niche scenario. And the correlation is just so high, especially just compare the two charts. Look at this. So if you zoom out a bit, gold, silver, it's the same thing. It's the same chart, but the percentage moves are different. So silver is only $60, which means that the percentage moves will be much, much higher. So the volatility is much, much higher, but you can risk manage. It all comes down to where's your stop? How much are you risking? What's the quantity that you're trading? It's all about risk management. You can trade any sort of volatility if you have good risk management. Like the cure for volatility and the cure for not blowing up is risk management, right? Stop loss and the right quantity for the stop loss. US is under $40 trillion debt, and this guy says no one needs gold at 5K. SpaceX. Oh, SpaceX. Okay, SpaceX. Let's take a look. SpaceX. Woo! Now, I'll be honest with you. I'm a fan of Elon Musk. I think I've read his biography. He's extremely successful, amazing guy, amazing businessman. But the SpaceX IPO was just a dump on the retail, a total dump on the retail. The company on paper loses money. The projections are crazy. They're talking about building space bases on the moon and on Mars or whichever other planet. Look, it's not something that the retail should really buy into because it's all tentative. You know, it's all 20, 30 years in the future. And in my opinion, you should buy how much the company is worth now, right? For a fair price. That way you get the best opportunity to make money. Now, the fair price would be around 100. So Damodaran, who probably, if you studied finance, that guy probably wrote your textbook. He basically did a evaluation of SpaceX, and $100 per share is a fair price. We're approaching that 100 mark, so right there we could bounce. If we do, could be a good opportunity to buy. Maybe long-term investment in SpaceX. Yeah, absolutely. If it's a fair price, but the company on paper still does lose money. Major red flag. Major red flag. Also, 90% of IPOs, they tend to underperform the index and they tend to be in drawdown in the first 12 months. So I would not be surprised if we get this for the next 12 months. It will be very, very likely. It's what the numbers are telling us, you know. What's up, Marco? Any thoughts of NZD-JPY, NZD-CHF? I don't like the NZD. I got burned on the NZD. So NZD, just a tough thing to trade. That RBNZ, man, they keep on being hawkish. Okay, so they keep on becoming more hawkish, and I keep on betting that they will become more dovish. So I think I already lost 2 trades betting on the NZD. I don't want to lose a third one, so I'm kind of staying away from the New Zealand dollar. Okay, I'm staying away from that, and I'm focusing on the stuff that I think works a bit better. In the world of Forex, that would be USD CAD and Swiss yen. USD CAD, I think, is the best buy at the moment. The methodology is, so the blockade is back on the strait. The strait is closed. No ships are currently passing through. There has been an escalation in the Middle East. Inflation is going to go up. Let me show you inflation. CPI. So inflation for the USD, it went to 3.3, 3.8, 4.2. Now, why did it keep on climbing higher? Because the strait was closed, because oil prices went up. Yes, the latest print was cooler than expected, but that was when the strait was open and oil prices were down. What is happening recently, the strait is closed, oil is going back up. It could easily hit 100, okay? And inflation could go up above 4.2%. That means the Fed is actually going to have to hike. It means the Fed is actually going to have to be hawkish. Hawkish is what? Bullish for the dollar. So I thought about what is the best currency pair to execute if I'm bullish on the dollar. I thought about GU. The British pound is pretty strong at the moment. I thought about USD-JPY. I'm betting on a stronger yen, so that's a no-go. Aussie dollar, meh. NZD-USD, I don't want to touch the New Zealand dollar. I already got burned. CAD is a pretty weak currency in my opinion. So the Canadian dollar has been struggling for months now. The numbers are not good. their housing data is really bad. So the housing prices are falling, which is another negative for Canada and for the CAD. So I think the best bet is to buy USD CAD. And I'm not yet in, but if I decide to take this position, you will be notified in the A1 Trading Discord. The link to join the Discord is in the description of the stream, and you can use the code Marco to get a nice discount. So if you want to get all of my trades, Nick, Chris Pulver, Iwind, Alan, you get everyone, all of the opinions, all of the trades. It's all in one Discord, the A1 Trading Discord. So make sure you join and use the code. That is it from me. I will now pass the show to the next guest. I will also play a 30-second video. So this is my first time doing it. So just it may take a while. Anyway, thank you very much for watching. You can catch me in like 2 or 3 hours because I'll be doing my second segment. Good luck, and don't go buying gold aggressively because it's still stuck in that box. That's the best advice I can give you. So thank you. See you in the next one.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by 1-step and 2-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare 2 firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello. Happy Tuesday, ladies and gentlemen. Hope everyone's well. Hope you're all enjoying your week so far. I know I'm not. The GPUSD trade that we spoke about yesterday has unfortunately turned around a little bit. Euro pound has also turned around slightly. So it's not looking too bright for me today, but it's okay. You know, this is the aim of the game. And in fairness, pound dollar is still very bullish on the edge finder. So it's not all doom and gloom, but yeah, it's not looking like a fantastic day so far, but it is what it is. Good morning, big man. Good morning to you. One opportunity 611116. Oh, that was maybe one too many ones. All good. Hey James, same for me on GU. Going to ride through it. It's all we can do. It's all we can do, Nick. Unfortunately, maybe we could blow on the screen, give Wash a call. I think there's a few other tactics we could probably deploy if things get real bad, but we're not there yet. Desperation's not high enough. The 10 years at 4.6%. Yikes. Yes. Let's take a quick look at yields. I don't know why this happens on TradingView. For some reason, I've got all of these different charts with different things plotted, and they just disappear. So every time I've got to close the tab, I've got to reopen it. It's real pain. First world struggles, right? Losing here and there is part of the game. Yeah, it's just been not a good month for me. It's really not. I did really well in June. June was actually probably one of the best months I've had in a very long time. I was up like 7.5%. I caught an amazing trade on euro dollar that returned about 5% alone. July has just been detro. It's been horrible. I really struggled through July. Maybe it's my birthday month. It's one of those things. You have a good month, but also a bad month at the same time. So there you go. Anyway. Yeah, US 10-year. Let's take a little bit of a holistic view here. What's the 2-year doing before we look at the 10-year? Currencies, pound is still in the lead, but we are giving back a little bit of the gains here. 2 years are, dominated by the 2-year, followed by the German 2 years, then the Japanese 2 years, sorry. New Zealand, pound, Aussie, Canadian. Okay. Yeah, so the problem really is with the US yield specifically. I think the market's really awaiting to see what's going to happen with the Fed. I think that's really all we can do. I think that's also what we're seeing within the dollar, because we are technically range bound, maybe a slight downtrend here, but overall I wouldn't really call this a directional move. I would more consider this a range bound with a slight downside drift. And I think that's mainly due to what we've been speaking about regarding inflation, which is really the idea that yes, inflation came down on the recent releases, but is it going to stay down? Or is it going to continue cooling? I think there's a lot of speculation that that's not quite the case, because as we spoke about, and I'm sure other people have probably told you similar things, if not the same thing, that we had the initial uprising. Probably actually uprising is not the right word. The initial kickoff with Iran and the US, and obviously there was a massive oil scare. Oil prices rallied, inflation expectations rallied as well. Then we had the Strait of Hormuz open. It seemed like we were starting to calm down. We had the peace deal, the MOU, those types of things. Oil came down, expectations of inflation came down, simple stuff. And one of the big things there was that we didn't need to rely on oil reserves so much because the Strait of Hormuz was opening back up. That was one of the big problems, because oil reserve, they were running out pretty quickly, and they still are. So once the Strait of Hormuz closed yet again for the second time, maybe third time, it then became a point of, okay, well, inflation's just come down. The Strait of Hormuz is still closed. Our oil reserves are actually lower than what they were. How can inflation remain low? Do you see what I'm saying? So I think there are these sort of question marks in the market at the moment where investors, traders, economists are a little bit hesitant to really put their eggs in one basket at the moment. At least that's the way I see it. Again, I could be completely wrong, but that's just my point of view at the moment. So I think really it's a case of we just got to wait and see what the next data is going to be, or the next data print will be regarding inflation. So yeah, that's the sitch. Why is GU reacting opposite? It's just the way the markets work, my friend. Let me add my indicators back. So just because, let's say here, just because pound dollar is very bullish with a score of 9, and overall the fundamentals are in our favor, the sentiment might be in our favor. We've got these things outside of the market, the external factors that might be bullish for the market. It doesn't mean the market's just going to continue to move in that direction. So you've got to consider things like pullbacks. You got to consider things like overbought, oversold, mean reversions, those types of natural market behaviors. But then you've also got to consider what's priced in and what's the market expecting next. So it's not quite as simple as, CPI is lower, we need to sell the dollar, for example. So there's a little bit more to it. But yeah, as far as I'm concerned at the moment, pound dollar is still bullish. We've still got a bullish trend here on the H4. The fundamentals are still fine. So I'm not concerned with this. I think it's just the markets being the markets. James, you're good at Aussie New Zealand. Am I? That's something I'm not well known for, as far as I'm aware. James, you're good at Aussie New Zealand. Can you give us some notes on it? So Aussie New Zealand, that's interesting. We've not really paid too. Actually, hold on. What was that market there? I just saw maybe I should have been in that trade instead. Okay, so Aussie New Zealand. What do we see here? Well, it's a little bit of a difficult situation because I think we're kind of in a push and pull. I think very similar to gold. I think there's kind of an argument to be a buyer and a seller at the moment on Aussie New Zealand. I would say the bear case is actually a little bit more. What's the right word? A little bit more obvious. So we've come into a very clear previous weekly level here. We've shown a slowdown here of momentum. We've broken out of this, I think 14, 12 years, something over a decade long of just range bound behavior on Aussie New Zealand. Every time we've attempted to break above, we've very quickly been sold back into this range. We managed to finally break and hold above when we had the hawkish RBA earlier in the year. That was enough because the New Zealand dollar was also quite weak, or the New Zealand economy wasn't doing too well. So that was, fine. It was a very simple approach, a very simple trade. Now that's not really the same case. We had, the RBA went on pause. The RBNZ actually picked up a little bit more hawkish as well. And then we've also got the idea of the technical side here that we are kind of overbought, we've not really had a meaningful pullback here on the higher timeframes. So I think the argument really for a little bit of a bear situation here, just a pullback, a little bit of repricing makes sense, but we're just not seeing that. So let's take a look at the Edge Finder and see what's going on here. See if we can dive a little bit deeper and come to some sort of stronger conclusion. Yeah, I mean, even the Edge Finder is -3, which does slightly line up with what I was just talking about. by no means this is enough to trigger me into position. I'm completely flat on Aussie New Zealand. I'm not looking to take any trades. But the -3 score is, again, slightly leaning on the bear side. Technicals are bearish, sentiment's bearish on retail side. So that means retail traders are buying. Obviously, we use this as a contrarian indicator. Inflation data is bearish. Job market data is bearish. Economic growth is bullish. So overall, it looks okay, but again, it's just not. It's not enough. You know what I mean? The score-wise over time, this is another thing I really like to pay attention to. I'm not sure if you guys do, but I would encourage you to, because it's quite telling, really, of if a trade it might be worth getting into, whether you're early or late. So, for example, here, what we've seen is Aussie New Zealand barely became bullish and very slowly turned bearish. So this tells me the bear reading on Aussie, or not necessarily the bear reading, but the -3 reading is not a spontaneous thing. It's not like we just had one data print that swayed the score. It's been a consecutive move or a consistent move lower in the score. So maybe if we can start seeing this score picking up to around -4, -5, then maybe I want to jump in, because we've seen it go from bullish to bearish over time. Again, showing some consistency and stability. But at the moment, the score just isn't enough for me. So crypto meat, unfortunately, I can't really give you much. I would say slightly bearish, yes. But then, of course, you need to account for this weekly time frame that's in a bullish trend. So I think you will be in a little bit of a disadvantage, to be honest. The daily is also very bullish. In fact, the daily looks pretty decent to be a buyer, to be fair. I'm not going to, again, but the daily looks quite nice. And then the H4 here looks quite bearish. So a little bit of mixed signals, to be fair. Can you please check New Zealand CAD daily? What do you think about the refusal of breaking resistance for the 4th time? So something with the Canadian dollar. I've been talking about this again for the past couple of weeks, really, is I really don't want to trade the CAD. And the reason really is just because of the exposure to oil and headlines. So that's one thing. But let's see what you were talking about. So, daily time frame. So, oh yeah, that's quite a nice resistance, actually. I didn't notice this. Okay, let's see. So, to be honest, this looks a little bit more like a range rather than a trend on the daily. And the very simple way that I see that is just the moving averages. So this is the beauty of them. They're not discretional because they are mathematically calculated, and they are what they are. You can't argue with them because, again, it's just data. So when they're side by side, like a train track, essentially like this, it tells me that there is no direction. Like here, we had them nicely fanned to the downside, and the market was clearly moving lower. Whereas here, we've actually got a lower low, and we've got equal highs, and again, side by side or parallel moving averages. So trend wise, I've got no interest here on the daily time frame. There might be an idea of a very simple sell resistance type approach, and that would just be based on the previous behavior we've seen, where we've obviously come down, and that would be more of like a historical type trade. Not something I like to do, but I would see kind of an approach there. Fundamentally, actually, it's kind of similar to the Aussie New Zealand. In terms of, we do have a slightly bullish reading here of +3, but again, it's not enough really to warrant me doing anything. Technicals bullish, sentiment's bullish, or retail sentiment's bullish. Inflation's bullish, economic growth is bearish, and jobs market's neutral. So yeah, fundamentally, there's nothing. Trend-wise on the daily, there is nothing. The H4 looks okay. So I think if you were really, if you had your own reasons to want to go long, let's say you had your own geopolitical reasons or central bank thesis, something outside the edge finder, it might be worth looking for either a pullback towards moving averages and wait for a rejection to the upside and look to continue this H4 trend. Or I would say an even better approach, if you want to be a bit safer, would be waiting for a break above this level, a retest, and then a continuation to the upside. That would be, I would consider the safest approach, but we'll see. Again, I don't think the fundamentals are there to warrant taking a position just yet. I will also talk about gold soon because I am in a gold position. I've got a video actually ready to publish in about 30 seconds. So I'll run that through with you. ASML, I've got no idea. Oh, right, is that stock? I was about to sound real ignorant then. Yeah, I don't do stocks. I don't mean to be rude, but it's just not something I'm very skilled or knowledgeable in. So I try to stay away from talking about stocks as much as possible. I don't want to sit here, talk about some stocks and be completely wrong, give people wrong information and all that type of thing. I think it's just safer for me and safer for you. Hello, James. What's your thoughts on pound dollar, euro dollar? Because I've seen euro have a great score. But of course, Middle East, I have doubts about euro dollar. Well, the Middle East, I've been saying this. I don't think it's a problem. I know I said I was a bit wary on CAD, and I am a little bit wary on the Canadian dollar, but that's kind of it. In terms of the actual situation, I don't think it's a big deal. I think we are obviously seeing oil prices starting to rise, which is to be expected, is what we spoke about earlier with this Strait of Hormuz closing again. And oil prices are naturally going to go higher on a lower supply. That's, again, basic supply and demand dynamics. However, when it comes to euro dollar specifically, this likely will be actually a bearish catalyst for euro dollar, because what we saw last time when when oil was rising, we saw the 2-year yield starting to rise. In fact, we saw 2-year yields rising on the back of higher oil prices, higher inflation expectations, and then people pricing in the idea of a Federal Reserve rate hike. So as we know, euro and the dollar tend to move pretty inversely. It's almost a one-to-one inverse market. So when the dollar rises, the euro weakens. That's typically what we expect with euro dollar. So in that case, yes, I would actually expect euro dollar to be slightly lower and pressured. The technicals line up with that idea. And we were talking about this yesterday, actually, because let me just double check. But euro dollar was getting a bullish reading. And I was saying that the technicals and the fundamentals are just dragging me in different directions, which is the case. So as we can see here, euro dollar very bullish with a score of 8. Fantastic. So fundamentally speaking, we do want to be buyers. The problem is, as we just discussed, oil prices are rising, which could lead to repricing and a stronger dollar. The daily time frame here is bearish. We've had, a golden cross, death cross, whatever people like to call it, and the moving averages cross on a daily time frame. We've seen the previous daily support break and retest here as resistance. We've seen rejections around this level. So the technicals are looking quite bearish, and there is a potential for the dollar to flip bullish again on the back of higher oil prices. So I'm a little bit iffy because, again, half of me is being pulled to being a buyer with the edge finder. The other half of me is being pulled to being a seller. So I genuinely could not give you a reasonable idea on I want to be a buyer or I want to be a seller, because, again, that would be a bit disingenuous on my part. On the dollar itself, though, it does look bullish, and it does kind of feed into what we just spoke about. So what I've been paying attention to is the fib. So if we draw it from the low to the high of this bullish leg, what we've seen is a pullback into the fib zone right here between the 50% and the 61.8%. We've then seen it pull, this level also lines up with previous structure on the left. So again, sort of break, retest, continuation pattern. So technically the dollar looks bullish. And then again, on the higher time frames, are we going to continue the cyclical pattern we have where we just hold on, sorry, I lost my trail of thought there. So I don't know, seem to have glitched. Are we going to continue this sort of historical pattern we have on the DXY, where we come down to this trend line and we just seem to have the bullish cycle or a bullish rally on the dollar? That seems to have started. We came down to this level or this trend line once again, and we have seen upside. So I think the arguments for dollar bullishness are still valid. But again, if we refer to the edge finder and the fundamental data, it's not quite there. So yeah, when it comes to dollar, I'm mixed, but typically speaking, I stick to the edge finder and simple technicals, which is, again, why I'm in the pound dollar long position. But if that doesn't work out, I'm very happy to flip short euro dollar. I think that could be a good opportunity if those catalysts come. But yeah, that's it. So hold on, let me take a sip of tea and then we'll move on. So I know earlier when we had Marco on, he was talking about gold and he said it's not a good idea to be aggressive long gold. I do agree with that idea, but I'm going to give you my perspective. So I am actually long gold. I've been talking about this, I think, for the past 2 days on these streams. I was sort of hinting at that I was long, but I never really gave you that much detail because I didn't want, and I still don't, by the way, I want to make this very clear. This isn't a signal. It's not financial advice, because this is a very individual approach because it's a dollar cost average on gold over a long period of time. It's more of an investment approach, not necessarily a swing trading approach. So it could get you in a lot of trouble margin wise if you do this wrong and if you try and follow me. So please don't. So what I'm doing on gold is I've got a DCA ladder approach at increments. So I have two very small 0.01 positions, by the way, very small positions on gold. I've got one entry at 4,058. I've got another entry down here just below 4,000. Then below that, I have open order, or sorry, pending orders here, 3,900, 3,800, 3,700, every $100 increment down. And then at 3,600, they double to 0.02. And this is what we call trying to manage an average price and get a better average price over time. So that's the approach I'm going with. And the reason I'm doing this is because short term, I think gold potentially could continue lower, but I'm not sure it has that much room to go lower. I could be completely wrong, but if that is the case, that's actually better for me because then my orders get filled at lower prices and longer term, I'll be better off. So it's not really a play on a short-term aspect. It's more a bet that I think, gold has had quite a significant move to the downside here. It's so from its all-time high to its recent low, that is a almost 30% drop. So I would say a 30% discount a 30% discount off the all-time high is a good discount. I'm happy to be a buyer there. Does that make sense? It's like, I don't know, let's say you go to the shop and, there's a steak that's normally $10 and it drops down to $7. That's a decent discount. I'd be willing to buy that. It's the same approach. It's just buying something that I see as valuable on a discount. So there is that idea. And then what there also is seasonality. Now, where is it? Seasonal scanners. I can't remember if it's monthly or annual that I want to watch here. No, it's the annual one I want to show you. So hold on, let's wait for that to disappear. Here, so historically, we seem to have, and I'll be honest, the chart here doesn't do it justice on what I want to show you actually, because I've been watching the 5, 10, and 15 year. But historically, from sort of April to sort of June, July period, gold does historically have quite a large downside move. Obviously, we started the downside move in sort of the end of January, start of February. And that's when the Iran situation kicked off. However, we are kind of at, again, historically speaking, the bottom of this pullback move. So if we line this up, I mean, it's not perfect, obviously, but there is an idea that gold could, and again, I want to make it very clear, this is based off historical price action. It doesn't mean this is 100% guaranteed. There is an idea that gold could continue higher based on the weaker dollar that we've seen, the weaker data. And if we do get a de-escalation in the Middle East, it could be a very beneficial trade over a longer period of time. Now, again, I want to make it very clear. These are very small positions. So if it doesn't work, it's completely fine. And I can cut the position if it's really showing red flags. So again, it's kind of like what, 0.05% risk over the next couple of weeks, I would say, if obviously these all get triggered. Sorry, not 0.05. I mean 0.05 lot size, not percent risk. And then the other idea is the weekly time frame that I've been talking about. Is we've had a multi-year rally to the upside on gold. I think what a lot of retail traders or a lot of traders in general are kind of not thinking about is after a multi-year rally, and we were very diverged or very far away from our 200 weekly moving average. I think a lot of people were kind of just expecting, a very smooth H4 pullback, and then we could buy in, it will continue rallying forever. We were due at some point a larger pullback on a higher time frame. This, I think, is a very healthy, natural, normal pullback. Again, lower time frames, it looks horrible. But on a weekly time frame, I think this looks really good. We've also got the weekly RSI here that's a little bit oversold. This hasn't happened in a long time. So the last time the RSI was oversold was very, very briefly back in 2023. So I'm willing to put a little bit of money on the line. It could go lower. It could come down to, I don't know, 3,500, 3,000. I don't know. But I am willing to be a buyer. I'm willing to take a little bit of a bet that gold can continue to run higher over a long period of time, like the next couple of months, couple of years. Fine. That's my idea. So yeah, as I was saying, I do agree with Marco. I do not think being aggressive with gold is a smart idea. So for example, I don't think being a buyer like this is necessarily the best option. But if you've got bankroll and you've got the capital to basically invest in gold, I personally do think it's a worthwhile idea. Not financial advice, of course, but that's the approach I'm taking. But yeah, moving on. Positions not looking too great. I did cut pound Aussie. That was a bit of a loss. Euro pound's not doing great. Pound dollar's not doing great. So yeah, it's definitely not been the best month for me. But yeah, that's trading. What can we do? So what else do we have going on here? Let's take a look. Hold on. Also, I'm not sure if you guys have just been quiet or the chat has frozen. Oh wait, hold on. My apologies, guys. My chat was stuck. The last message I had for that whole time I was talking about gold was Nick saying, if you're enjoying James' commentary, make sure you subscribe. So I'm sorry, I've missed all of your messages. Let me just quickly catch up with you. Gold is going towards 2,500, 3,500 in the next 2 to 3 years. Very possible, absolutely. Thank you, James. No problem at all. I call this a Chris Pulver campaign. I watched him DCA into silver for months in 2022, 2023. You can imagine how it turned for him. Absolutely fantastic. Well, yeah, I wish I was Chris. I mean, nothing compared to what Chris did, but yeah, I was doing a very similar approach on silver. I think last year I was buying it at 40, 50, 60, 70, and then closed it all at 80. So I missed about $40, moved to the upside when it reached 120. But yeah, I think doing this approach, again, if you've got the bankroll, you've got the discipline, and you understand risk management, it can be very good, but also, yeah, very risky. Very good. He made a great return, scaling in and out for a 3-year period. Yeah, I mean, Chris is a different level. Chris is a fantastic trader. Is the market outlook risk on or risk off? At the moment, I would consider it slightly risk off, but it's tricky to say, to be honest, because we don't have typical risk dynamics at the moment. So, you know, normally we would determine the market risk by a couple of things. You could use the VIX, you could just look at the S&P, we would look at gold, we'd look at the yen, the Swiss, we'd look at the dollar. But it's not quite the same because we've got obviously a bit of a different dynamic. So because we've got these inflation the inflation concerns, we've got gold going lower, which is, by the sort of the rule book, that's kind of a risk on event. You know what I mean? So I would say yes, risk off with a few exceptions. So I wouldn't say it's quite as simple as just risk on, risk off, but hopefully that kind of gives you what I mean. Excuse me. But yeah, if we look at sort of the S&P, we're really not doing anything. There's been no direction in this market since over a month, actually, almost 2 months, since basically the start of June. The S&P's done nothing. It's just been sideways. So yeah, I wouldn't consider this risk on, but I also wouldn't really call it risk off, to be perfectly honest. Deposit 500, profit 900. If you deposit 1K, profit 5. Oh, okay, never mind. I thought I was reading an interesting message there, but it's a scam. Historically, it drops around 1/3 of its peak, then chops for a while. Yes, I know gold is it's a fun beast to trade, but on higher time frames, you've definitely got to be patient. But yeah, we'll see how it goes. Again, I don't have a huge amount of risk here, so if it doesn't work, it's fine. I'll take maybe a 2% loss. Obviously, it depends where I get out. It's a little bit more difficult to say the exact percentage risk because obviously, if the market, for example, plummets here now, then I'll take a larger risk. But obviously, if I'm assuming it's going to maybe drop here, and let's say the trade becomes invalid in a couple of weeks' time, okay, then I'll lose on all these positions maybe 1.5% to 2%, depending on exactly the situation. So yeah, it's not a big thing by any means. Also, wait, hold on. Gold has dropped 50% after multi-year rally, top at 2011. Oh, are you using the, is it the inflation adjusted chart? I know there's a different chart for gold, but yeah, I know exactly what you're talking about. Also, gold is just about to hit a bullish in unmitigated FBG. You know what's funny? In one of the chats on the Discord that we're in, I remember when gold was having this move to the downside, we were all talking, we were sending some memes to each other about all these FVGs on the weekly and monthly timeframes. And actually, it does seem like that might be might be the case after making jokes about it. Central banks and retail are exhausted to buy more gold at the top. They don't have infinite capital to deploy. I mean, retail doesn't matter. No one cares about retail. They make up, what, 7%, if that. And central bank wise, I wouldn't say they're exhausted by any means. But again, neither of those things are what really should drive a trade. We spoke about the central bank idea yesterday. It's a good cherry on the top. You know, if you're already buying gold, you've already got a well thought out thesis. Cool. Central banks are also buying. Fantastic. But, you know, central banks have been buying this whole move to the downside. It's not stopped it. It's not slowed it down. It's just one of those things. You know what I mean? So, yeah. And the same thing for retail. I really don't care what retail are doing. If they're doing the opposite and there's already a good trade idea. So let's say, for example, gold was super bullish on the edge finder and retail was super bearish. Okay, fantastic. That's, again, another good cherry on the top. But I'm not going to avoid a trade just because retail is doing the same thing or doing the opposite, for example. SP now about to climb. I'm not sure what SP is. What do you think about Bitcoin? We can take a look at Bitcoin. It is looking okay, but the thing is with Bitcoin, it's looked okay a couple of times, and it just hasn't done anything from that point. So, you know, we're still hanging around this really nice weekly level of support here. This has been in play for quite some time. We've rejected over here. We had a run to the upside. This was a rejection of the daily 200 moving average as well, as we see. So the daily time frame looks horrible. This looks like a really typical downtrend, pullbacks towards the 200 and then rejections. So if you're looking to be a buyer or a seller, I think the next thing to pay attention to is how we react at the 200 moving average. It does look like we're going to have a pullback towards this point. So it's now a case, do we see another rejection and a run lower towards 60,000, then maybe 55,000? Very possible. But if we break above the 200 daily moving average, so let me go to this. If we break above the 200 moving average, there is the idea, actually, we pull back, use it maybe as a dynamic support, and then continue to run higher from there. I think that's kind of the two outcomes you would want to watch for. I don't trade Bitcoin. I always say this is not a market that I'm involved with whatsoever. But yeah, on a technical side, that's really the two ways I think it could go at this point. If we do end up breaking lower, I think we will see a large move lower. I don't think it's going to be, we just break and, you know, range bound and then, you know, slowly trend. I think it will be a very volatile break lower. I think that would mainly be due to a lot of liquidations and stops being hit. So yeah, I would be very cautious buying Bitcoin, to be honest with you. I don't think it's necessarily a bad buy, especially if you are more of a long-term holder. I think buying it, you know, these discounted levels could be a good idea if you've got your reasons to. But yeah, in terms of short-term swing trading, I would just be quite cautious at the moment. A broken clock is right twice a day. One of those of yeah, that is a good way of saying it. Gray Fox. S&P. Do you think the new ability to scan and find deposits will have a big effect? No, I wouldn't say so. But I've not really heard anything about that, so I could be misinformed. But yeah, I've got no idea. But yeah, the S&P is an interesting one for sure. Again, I was saying this yesterday, but I'm very cautious on the US markets at the moment. I think they're at a bit of an inflection point. I think, again, we've got oil prices going higher. Are we going to see the markets pricing in more aggressive Fed hikes yet again? I think it's very possible. Sorry, I'm not sure if you can hear that. We've got the builders next door again. So yeah, the market's possibly pricing in Fed hikes. I think that is quite possible. We've got the fact that I really genuinely think AI is a problem for the markets. I think long-term AI is going to be fantastic. I really do think it's a revolutionary thing. But I think as it stands at the moment, it's actually more of a detriment to the markets than a positive. And I think actually SpaceX is a great reflection of that. We had mass euphoria, SpaceX IPO, everyone's buying in, really good rally. The amount of posts I saw on Twitter, basically around the top of people posting profits saying, everyone told us not to buy SpaceX, da, 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 da. And then, from that point, all it's done is decline. I think we're basically in for the same thing. You know, I think OpenAI will IPO. We're going to see mass euphoria, mass retail investments, and money flowing in, and then it's going to get to a point where actually these companies don't make money. They're just burning money. Why would you want to buy a company that just burns money on a daily basis? I wouldn't want to do that. I not a chance. So there is this side of it, really. I think we are in for a large correction at some point. And as I said, I'm not here to be a doomer. By no means am I sat here saying I'm selling. You know, I know this is a bear case, but I'm not trying to sit here and say that everyone needs to sell because we're having, you know, a 2008 style crash. I do think that might happen, but it could be a year from now. It could be 5 years from now. It could be 10 years from now. I really don't know. And I don't want to sit here in 5 years when it happened or if it happens and say, ha, I was right, because I don't want to be that guy. You know what I mean? So take this with a grain of salt, but these are my concerns, if that makes sense. So yeah, that's why I'm not really interested in these markets at the moment. And again, we do have just range bound behavior. There's no trend here. Even if I did want to trade it, I can't. So yeah, sat on the sidelines. German 40. Yeah, we can have a look at German 40. AI is awful. I don't think it's awful. I just think that, how do I explain it? I just don't think it's ready. You know what yeah, I'm not really sure the right way to put it into words, but if we've got these AI companies that, you know, they have revolutionized things. You know, the crazy things I've built with AI, you know, I just sit there and say, I'll make this, and it just does it. It's incredible. But you know, again, these companies don't make money. They're expanding like crazy with data centers. They've got crazy debt. The money that is flowing around, you know, that is like a circle. Again, I'm not sure how to explain it in real stock terms. I'm not a stock guy, but you know, it'll go from Nvidia to OpenAI, and then it'll just go in this big loop because they're all invested with each other. And again, the bank, as we said yesterday, the banks are massively exposed to AI debt. I'm fairly sure they're trying to offload that because they're getting concerned. So yeah, I think there were all these warning signs that I'm not sure it's going to be a case of, you know, oh, we've got AI, the markets are just going to rally from this point going forwards. I actually think it'll be very much like the 2000s bubble, you know, with the internet explosion, where it's a fantastic thing. You know, we're still using the internet today, but we you know, have that large move to the downside, that large sort of crash or pullback, whatever you want to define it as. And then we can normalize and continue from that point. But again, I want to be clear, that might not happen. This is just my concerns, my ideas and thoughts. Please don't go and sell the S&P based on that, and take it with a grain of salt. I'm a robotics engineer. We will revive IA, intelligence augmentation. It is the mirror image of AI. Interesting. Yeah, I think, you know, in 10, 20 years time, AI will just be a staple. I think it will just be completely normal. Everyone will have it in everything. It will just be, you know, it'll just be like the internet. It's like you don't even think twice about going on Google. You just do it, and everything's on Google. It'll be like the same thing. It's just like a thing that we have. But yeah, I think we're in a bit of a teething period. You know what I mean? Like, I think we're in a bit of a period where it needs to settle into its place. It needs to find its funding. But we'll see. So yeah, I'm going to leave it there though, because as I keep saying, I'm not a stock guy. I don't look into stocks and companies at much of a deep scale. So I don't want to sit here and continue to spout things that might not be factual and things, give people wrong ideas. What effect do you think Trump manipulation being sold will have on what? I need a bit more context. Trump manipulation being sold. What does that mean? Yeah, I'm not 100% sure what that question really means. Free fall to the abyss, to the bottomless pit. Yeah, I mean, it would be detrimental, to be honest. You know, you get pensions wiped out, you get people's investments wiped out. It would be horrible. But as traders, that's where we shine, because obviously we can diversify and we can really make money off those types of things. And you know, that's our job as traders, really. You know, some people can call it unethical because we make money on wars and pandemics and crashes and all those types of things. But you know, you've got to separate, really, as far as I'm concerned, you've got to separate the humanitarian and the moral side of it from the job. and that's the job we've got. So, yeah. Trump had now set up early access. Oh, you mean okay? You mean yeah, his Truth Social tweets being sent out early. I don't think it will have much of an effect. I just think it will make more money for the people who already have the edge. So the way I see it, retail have no edge. We don't know anything, and we can't. Well, in rare cases, you know, the very smart retail traders that maybe did economics in university or are really just talented or skilled or knowledgeable, maybe. But for the average retail, like me, I don't ever claim that I know something the markets don't. The only thing that we try to do, and I'm speaking generally for the masses of fundamental traders, what we try to do is try to find what the institutions already know and jump in with them. We're not trying to find things they don't know, because let's say, for example, you found something about the DAX. Let's say you found a company or one of the largest contributors to the DAX that had really, really bad things on the back end that just no one had found for some reason. You couldn't do anything about that. You can't move the market. You don't have the connections to try and sell the idea. You can't go on CNBC or Bloomberg and say, oh, we've got this, you know, this company's doing this. We need to, the DAX is going to fall apart. We have to wait. You know what I mean? We have to wait for the big players to do something. So what I'm trying to say is the Trump thing won't have an effect for us. Maybe it would deteriorate some edge for some retail algos that do trade off Trump tweets. But for, you know, for us swing traders and average retail traders, it's not going to make a difference. However, I do think it is insider trading. I do think it should be illegal. So I think from that side of things, it's completely wrong. But from actually us trading, I really don't think it's got much of a big deal. A few seconds ain't going to make much difference. Exactly. That's what I was saying about the algos. So let's say the 3 seconds, maybe 5 seconds, maybe even 10 seconds of difference between when the institutions get that headline and when retail see it, it's not enough for us to do anything anyway. So let's say you've got your phone and you're at work and you see a Bloomberg notification or a Reuters headline, whatever it is, Financial Times, Trump just tweeted, or even Truth Social notification, Trump tweeted this or Trump posted this. The time you've read it, you've clicked on it to actually see what it is, gone back to your whatever it is, MetaTrader or whatever, and actually done whatever it is you need to do. You're already too late. The algos have already done it. The people that sit there, that's their job. And, you know, again, you're too slow anyway. So yeah, in simple terms, I don't think it's a big deal at all. But yeah, legally, big problem, I think. I trade Nas daily and his tweets have made massive drops and climbs in a few seconds. Might have helped. Yes, I suppose there is maybe an argument if you're a scalper potentially, but I'm just trying to think. Yeah, I mean, maybe it's a little bit unfair, but again, I just don't think it's. I don't think it's enough for the retail traders in general to be annoyed about. Gold retracing. Expect 4,047. Okay, I'm going to expect 4,047. Yeah, I mean, as I said, I don't care what gold's doing in the next couple of days or even couple of weeks. I'm happy to just sit through it, let the positions run. Yeah, I can add in or I can remove positions if needed. So really the way that DCA works, or at least the way I manage DCA positions like this, is I will cut the larger losing positions when needed. So I will allocate a certain amount of risk. So for example, let's say my maximum risk to buy gold on this whole crusade here is 5%. Obviously, I don't have the full 5% deployed at this point. This might be, I don't know, let's say 3% or 2.5%. If one of these positions starts losing big time, I want to say big time, it's relative to the allocated risk. I'll cut that position and look to add in maybe at 3,000. And then I can cut this position and maybe looking to add in at 2,900. And this is a way, yes, I'll take losses in the short term on these positions, but eventually I'll have a really good average price maybe here at this point, roughly. And then, you know, if and when gold does decide to continue higher towards 6,000, maybe 7,000, then these losses will be completely meaningless because the other positions will be doing all the work. So yeah, that's a brief idea on the approach. How do quants make money at high frequency when there is commission or spread? Well, quants don't operate like you and I. It's not a case of they have a MetaTrader account with a retail brokerage that charges them per lot size or per trade. It doesn't really work like that. So if you look at Jane Street, for example, they are quants, but they don't operate like us. They are market makers. So they will basically benefit from the bid-ask price spread. I'm not sure exactly how it works. They don't disclose their strategy, of course. But from the public knowledge, they're not subjected like we are in the same ways. Of course, they'll have fees, but it's completely different. It's a different game entirely, really. It's just not comparable. So you've got that aspect. But what you said is actually why a lot of retail algos don't really work over a long period of time, because of the spreads and commissions. The Trump tweets only tell us that they don't plan on ending a war. Well, yeah, at the moment. At the moment. We'll see, though. When that changes, that 10-second difference could be quite a big deal, but we'll see. I don't even know if it's in 10 seconds. It might be more or less. I'm not sure. But either way, it doesn't matter. It is what it is. The only thing we can do is continue to do our jobs. Even if it was, let's say, really unfair and market moving, what can we do? I mean, the most we could probably do is start a petition or write to the SEC. But beyond that, we're powerless. We're just degenerate retail traders. No one cares about us. Anyway, so what do we have here before we end? I've got about 15 minutes left. Pound dollar, we've already discussed. I'm currently in the red on pound dollar. Pound Swiss, we could look at actually. Well, yeah, we'll pay attention to pound Swiss. We've talked about that last week, I think. And I took a bit of a contrarian approach. Just bear with me. It's quite difficult talking for an hour nonstop. Anyway, what were we talking about? Pound Swiss. Yes. So Edgefinder is bullish. One of the things I do quite like is the H4 and the daily timeframes, I think, are very good. They really do support being a buyer. So if we were just going to follow sort of the bread and butter typical approach, I would just draw the fib from the low to the high. The 50% or the fib zone actually lines up really nicely with this level of structure. I do really like this setup. The problem I've got with this, though, and the reason I'm not interested, is because of the weekly time frame. So if we look at the behavior here, every time we have some sort of move to the upside towards the 200 moving average, we just correct all the way back down. And overall, we continue this bearish higher time frame trend. I don't really want to buy into that. I think there is probably money to be made on the long side, but I don't like this. It makes me very uncomfortable. So what I'd rather do here, rather than being a buyer, is actually just wait to be a seller. So if the Edgefinder starts dropping, if the pound Swiss starts dropping off the Edgefinder, starts flipping towards neutral, or even bearish, I wouldn't really mind looking to sell around this 200 weekly moving average and looking for some sort of mean reversion back down. Now, the other side is actually, or on another perspective, I should say, is that being a buyer is much more fruitful because the swaps are really good. So obviously, the Swiss National Bank's interest rate is 0, whereas the Bank of England, I think at the moment, is 3.75. So being a buyer, again, you get paid very nicely on the swaps, whereas being a seller is quite expensive. So I think if we, again, kept it simple, being a buyer is probably the easiest way to go. The trend is there, the swaps are there, the Edgefinder's there. The only reason I don't like it is because I'm being pedantic and I don't like the weekly trend. That's purely the only reason I'm not looking to trade this one. I trade XAU because 0 fees, 0 spreads. Do you think stable coins will hold? I honestly don't know, Joe. Unfortunately, I'm really uninvolved in crypto. It's not something that I pay any attention to. So I don't want to give you any information on that because I just don't know. Sluggy, hello. Good to see you, my friend. Hope you're well. Hope you're having a good Tuesday. Okay, what do we have going forwards? Eurodollar bullish. We did speak about Eurodollar, so I'm going to skip that one for now. China, we looked at yesterday. It's a horrible market, so I'm not even going to bother unless anyone wants me to. CAD Yen. I did want to get into CAD Yen, but I've not looked at it since. Yeah, it's just not giving what I want. So I need this market to pull back further. It's had a really nice run to the upside. I wanted to see a pullback towards the 61.8 retracement or fib level, and then it could pull, retest into previous structure on the left. That would have been a very, very good pullback into structure, into the fib and continuation. It would have also been a nice break and retest. But the pullback here is just too minor. I cannot warrant getting in here. It's just not deep enough. So unfortunately, I'm sat on the sidelines. Although I really like it, there's nothing I can do here, sadly. So yeah, I'm just waiting on that one. What else do we have? New Zealand US dollar. Again, I'm a little bit cautious on the dollar. I'm already in pound dollar. I'm already in gold, so I don't really want to get more exposed to the dollar. I would actually quite like to go long on the dollar at some point, but I just need to wait for something to flip. At the moment, the edge finder is very bearish on dollar. We've got pound dollar bullish, euro dollar bullish, New Zealand US dollar bullish. Then we've got US dollar CAD bearish. So I really want to see something flip, which we obviously don't have at the moment. Thoughts on Aussie New Zealand? Actually, we did cover Aussie New Zealand earlier in the stream in a bit more detail. I've only got 10 minutes left, so I would encourage you to rewind the stream towards the start of my segment, and you'll see me talk about that market then. I don't really want to go over it again because I'm a bit limited on time now, and I can't give you the same depth that I did previously. Actually, let's see who's on after me. Let's just see. Alan is on after me. So in 10 minutes, we'll have Alan Perez coming to take over the show. So if you've got any final chart requests, let me know. Oil is ripping up again. Ouch. Is it? Let's see. Yes, I know oil was doing quite well earlier. Is it continuing higher though? Yes, it is. It's really unfortunate. I was in a really nice position on oil here, but I got stopped out in this wick, and obviously now it's continued. So a little bit salty about this one, but there you go. But yeah, I think the main focus now for oil is this level of resistance. So obviously previous support, are we going to get, the break? Well, we had the break. Are we going to get the retest and then a move lower? Or are we going to break higher, retest and continue and end up back in this sort of range that we were in? It wouldn't surprise me if this happened, because that's kind of what the situational landscape is indicating towards at the moment. If we don't see de-escalations, I actually could very well see oil back towards 120, maybe 130. It's a bit of a stretch. I don't want to call that one, to be honest. But if things don't change, I really do think 120 could be the next point of stopping. So we'll see. But of course, you need to pay attention to the headlines and see how things are developing. But yeah, as long as the Strait of Hormuz remains closed, I think oil is going to continue to move higher. I think New Zealand is a good long. Yes, I also do quite like the New Zealand dollar, but I just don't see many opportunities on it at the moment. As oil is pushing up, we should see another test of 4,000. Yes, as long as oil is moving up, I do think gold is going to remain bearish, yes. Can we do gold again? Okay, maybe in a minute. Where is Ivan? Sometime no see. That's a good question. Let's take a quick look. I'm not sure. Is Ivan on today? He's not. I'm not sure if Ivan has set placements or if he just comes on when he's free. I really don't know. That's probably one to ask when Nick comes on later. Because yeah, I'm just a guest here. I've got no control or no knowledge of everyone's schedule and things. So New Zealand US dollar longs. Yes, Sluggy, I don't really like that idea because again, I'm already long gold. I'm long on pound dollar. I don't want to go long on another dollar pair. But also, I'm a little bit cautious on actually if the dollar might be flipping bullish again. So I think I'd rather be short on the dollar. Long on gold, short on a dollar pair. I just need to find one that I like, and it might be euro dollar, but we will see. But again, the problem with that arises when we check the edge finder because the edge finder doesn't support that at all. So it leaves me in a bit of a quinky dink, a bit of a problem, a little bit of a pickle. So yeah, we'll have to see what the rest of the week has in store. I'm in New Zealand. We are opening 2 gold mines within 50 kilometers. Nice. You can go and steal some gold. Go and sell it. No worries. Good stuff. Okay, so gold again. Well, we did already cover gold. So I'm not going to go over the whole thing and my whole positions. If you want to see why I'm going long at these points, just rewind because I did cover it. In general, though, I think gold is still bearish. I don't think there's an argument really for it to be bullish. I mean, we do have weaker dollar. We're historically heading into a very bullish period from now until the end of the year. That's kind of all there is. We've got oil rising, which could lead to higher inflation expectations, which I do think is the base case, which will lead to the markets pricing in further Fed hikes, which will lead to further gold weakness on dollar strength. So I think the base case really is gold lower, which as you can see, I'm happy to buy into. I do think that it's worth, but personally for me, it's worth buying into at this point going forwards. So I think this is a little bit of a trap. You know, when a level in a market is super obvious, normally it's not a good sign. And I think this is too obvious now. I think actually we are very likely to head lower. So yeah, I really don't think being a buyer is a great idea. But also, I don't think the fundamentals warrant being short. I think the geopolitical landscape does warrant being short. But again, on the Edge Finder doesn't really help that right now. Greetings, James in chat. Good morning to you, or good afternoon, wherever you're located. Hope you're well. Pound yen. Yeah, pound yen was definitely something I was paying attention to at one point, but it's just not really something I'm that bothered about at the moment. So as you can see, I was looking to take this position. I didn't do it, and hindsight, it was a good decision not to. But I think there is really two outcomes here. I do think it's going to remain bullish. I don't think there's really a bearish case here. So I do stand on the bullish side. But I think either we hold this level, very simple break, retest, and as you saw earlier, that it is a fib level. So it's a decent level to potentially hold. So that's one outcome. Or we actually head a little bit lower and come towards a 200 moving average and then continue higher from that point. I think that's kind of the two outcomes I would expect. The only exception from that would be if we get a MOF intervention for the yen. In that case, I would expect a deeper retracement, obviously, but I'm not going to try and trade around that because I don't. When it will happen, by how much, I don't know. We'll see. But yeah, I do remain bullish. But again, it's more a case of just when is that entry next going to be valid. It might be worth taking a bit of an aggressive approach, maybe looking for an entry here. I don't really like this, but I would see the argument for it. Euro pound is the most interesting pair. Yeah, I'm underwater on Euro pound, which isn't great. So yeah, it's looking like this might be a bit of a stop out, but we'll see. Thoughts on pound Aussie? I don't have thoughts on pound Aussie. I was liquidated on this position. Well, sorry, I wasn't liquidated. I liquidated this position yesterday for a bit of a loss, but yeah, I really don't see anything going forwards for this market. I don't think there's fundamentals for it really. Let's see. Yeah, the pound Aussie's completely dropped off the Edge Finder. We're broken below the 200 moving average on the H4. There is nothing here for me at the moment. So I can't really give you any analysis there. There's no trend. And again, there's no fundamentals. Right, we've got about 2 minutes. So we'll go over Euro New Zealand. It's definitely an interesting one. Very bearish on the H4, but there's no reading on the Edge Finder. Let's see what it actually does have though. So -2. Yeah, really not much, to be honest with you. So economic growth is bullish, inflation data is bearish, sentiment's bearish, COT data is bullish, and technical is bearish. Yeah, I'm not liking this one. So we came down to this pretty strong H4 level of support. What's the daily doing? I'll be honest, I actually would slightly lean more on the bullish side. Sorry, the weekly is bullish. The daily has come down to a really nice level of support. The H4 again, pretty nice level of support, and we are seeing quite a nice rejection here. The issue is this H4 time frame is bearish, and the Edge Finder doesn't have a fundamental reading. So the buying idea or the bullish idea I just said would be purely technical based, which is something I don't like to do. Obviously, I like to align the fundamentals and technicals. But maybe if the Edge Finder continued to move bearish and we got a more bearish score, maybe there would be an idea of something like this. So we pull back towards the 200, rejection, and then a continuation lower from that point. I think that's all I could really come up with, to be perfectly honest. Oh, the Nikkei was something we were looking at yesterday. Let's take a quick look there, because what we saw yesterday was the only real interesting thing on the COT report was nice buying on the Nikkei. So I was looking to maybe get into a position on this rejection of the daily support here. I'm not in a position yet, but I think there might be an idea there. If we can get technical alignment and maybe some sort of reading on the edge finder. But again, I think the idea is there. I just need some more development. Jobs data came in good for the UK. Now CPI beat, we can see some solid upside for the pound. Buy back those shorts. Yeah, unfortunately so. Thanks for your insights. You've been awesome. Thank you very much, Joe. I appreciate the support. Euro New Zealand, fundamentally bearish. Not really. No, I mean, -2. It is on the bearish side, but I wouldn't say this is enough to say it's bearish, in my opinion, especially for the way I trade. Anyway, ladies and gentlemen, I've been here for an hour. It's time for me to head off and get a new cup of tea and take care of some business. So guys, stay safe. Don't get margin called. We've got Alan Perez coming to take over the show, so don't go anywhere. Thank you for being here, and I'll see you all tomorrow. Enjoy the rest of your days.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. Good morning, guys. I'm filling in here for a moment before Alan tunes in. Hope you guys are doing well. Thanks to James for an awesome and Marco before him. Stream is it's come a long way, man. It's cool to just see all of these talented traders sharing their thoughts on the show. And again, it means, you know, from the viewer's perspective, especially my European friends and Asian friends, African friends, you're looking at a earlier show start time, which is nice if you're trading the London session or the very early New York session. So we'll have Alan join here in a moment. I'm just going to check that on our back end, but said he's just dealing with some PC issues. So I am you're stuck with me until then. Nasdaq, S&P, they're bouncing a little bit here today. I'm tempted. I really went back and forth. Do I want to be long S&P right now? And to be fair, like if I go to my system, Edge Finder, go figure, then there's been a pretty solid reading here recently, which has been Edge Finder's actually been getting bullish ratings on S&P. Alan said he hit his instead of skip update, he hit update on his computer. So all good. It happens. I actually had to update my computer this morning as well. My camera wasn't working right until I updated. Anyways, oh, look at this. So S&P actually flipping neutral here. That's going to be definitely due to the trend filter here kind of coming in a little bit softer. I will say I am very intrigued S&P 500 wise if we were to get a pullback into areas like this. And I posted this. I'll share a little bit of a blurb here that I posted to members in the Discord yesterday. I said that I am there's a bunch of stocks that I'm watching right now. I'm watching Spotify, Netflix, ServiceNow, Intuit, Adobe, Walmart, and Costco. I like these names, but I'm waiting for some kind of a broader pullback in the big picture markets. And this is one of the most frustrating. I heard Marco talking about this earlier during his session. If you trade individual stocks or invest in individual stocks, one thing that is kind of frustrating is you are sort of bound to an extent by what the broader index is doing. What I mean by that is if the broader index goes on a 3 to 6 month downtrend, pretty much any stock that you pick, most likely, most of them are going to be rough, right? So for me personally, I really like the idea of waiting for the actual index itself to be on sale and then browsing a catalog of stocks that I like and getting those at discounted prices. Does that make sense? So in stock trading land, they call this a top-down approach. Now, some stock people are the opposite. They are bottoms-up investors, meaning they look at the company first and they say, do I like the company? Do I like the valuation of the company? Do I like what the company does? Do I think they have a long-term prospect? Do I think their moat is strong? Keep competitors out of the way. And then they look upwards and they say all the way up, what's the industry that it's in doing? What's the sector that it's doing? What's the broader market? And what's the economy? So I go the other way. I prefer, you guys know me if you are a regular of my content, that I am a macro fundamentals trader and investor. First, I look at the top down. So I'm looking at the state of the economy. I'm looking at inflation, jobs, monetary policy, all the way down to individual stocks that I might like. Again, there's not necessarily a right way or wrong way to do that. It's just personal preference and investing styles. There are many different styles of trading, investing, etc. There's not one holy grail. There's many ways to lose money, and there are a few ways to do decently well over time. Anyways, for the index level, would really like to see if we can get it a little bit more softness in the index at that time. There's individual stocks that I like, etc. Just a quick little look at gold here, just to check if we are all set here. So gold is looking on the daily chart. It's still trying, man. You've got the downtrend persisting, but you have support holding at 4,000, like stubbornly, very, very well. So I have GDX short put positions on, or a short position. Let me say that better. I have short puts on GDX currently, which is a bullish to neutral strategy using options. I have sold the 68 strike price puts. I believe it's the August 21st expiration day. So I have 30 days left on those puts that I sold. I didn't long puts, right? When you buy puts, you're betting the stock's going to fall. When you sell puts, you're betting the stock just has to go sideways, higher, or modestly lower, and you make money, especially if it's an out of the money put like this one. So I sold cash secured puts on GDX, which is a gold miners ETF. And so far, we're looking okay. The stock has really just traded sideways since I did that. Gold itself has traded nicely, in a range here, which when you're selling puts, a range is your friend, right? A range back and forth just means time decay eats away at the value of the option. And if you're selling options and time is passing and the stock is not going anywhere, it's to your advantage. So anyways, with gold, I'm sitting in these short put GDX positions, but outside of that, I have no short-term trades. The GDX position is more long-term focused. It is not a in and out type of trade in the sense that, I'm trying to just trail stops on it. Gold, that being said, sitting at support here about around 39.80 has found buyers each time. I would like to see, from a technical perspective, I'd like to see gold do one of these guys. Like, we're trying to break this trend line. Can we get some actual follow through? Because every time we've gotten a little bit of a run going here on gold, sellers have just smacked that baby back down. So we are looking at a scenario here where gold is testing some resistance, but it's a moment where we're saying, gold, you got to prove it, man. Because every time sellers have, without fail, stepped back in, we want to see if you're a tentative possible bull like myself, like you're open-minded to a bullish trend flip, we want to see technicals actually hold here. Okay, I believe we have Alan. Nick, we can flip slots if you're already flowing. Yeah, you want to do that, Alan? I'm fine with that. Yeah, we can totally do that. So are you good with doing... That'd be a long one. If you're good with that, we can go for it. And then Marco can join you midway through. Stream viewers, as long as you're okay with that, if I can stick around with you for a little bit. That'd That's good with me. Hold on. I want to switch something over here. I got to tell you guys something pretty cool that we are doing here tomorrow. Yeah, tomorrow. I'm going to switch this over on the screen. There we go. I'm going to put this here. So I'll get to that in just a second. But anyways, so in the meantime, gold, I'm still looking for the breakout. I'm looking for some kind of follow through here. Too many times in the past have I gotten stuck in, a range bound market where I'm trying to trade the breakout. Like the nastiest thing in the world for a trend trader is to get stuck in a range. Absolutely not what we want to be doing. And so with GVZ, which is a gold, here's a little quick tip for the gold traders at home. Gold Volatility Index, GVZ, add this to your watch list. It's a nice little way to keep an eye, just like the VIX is for SPX. The GVZ is for gold. It's gold volatility mapped out. What's nice here is that gold volatility, when it's very low like this, I would actually, let's scroll back a little bit. It's low, kind of. It's still elevated from maybe where it was, a year ago, where gold was really quiet and just kind of grinding up every day. But this is telling you that we've actually entered into a quieter than usual recently period for gold. Like gold's price action has been very choppy. And I actually like the idea of like looking for gold volatility to break out, to explode in combination with this move higher. Also, if you guys are cool with it, I would like to take a moment to map out our put call walls on gold. I've been doing this here periodically. So we're going to do this. Gold, I'm going to do the expiration date as August 21st. And what is the current price of GLD? So GLD is the ETF that we're going to use. We're currently sitting at 372. So we'll just put 372 as our reference point. I'm going to hit enter on that. And let's do this. Actually, why did that make that so small? I don't like how that did that. Let's just reset that for a second. GLD. Did I do something wrong? I might have done something wrong. Hold on. Okay. So anyways, we said 372 is like where we're currently sitting. I don't like the way that kind of collapsed all the bars. The way to read this is we have some significant support levels according to our put wall. So let's map out our put wall and our call wall, okay? So if you don't know what I'm doing here, I promise it will make sense in just a second. Give me just a moment. Okay. So we have a lot of puts at 370, 360, 350. Let's map those out really quick. So 370, 360, 350. I'm going to just restart here and I'm going to map this out. And I promise it's going to matter. 360, let's do 360. And then template, we'll do put wall. 360, 350. Did we say 370? Well, 370 is pretty much where we currently are. So that is, we'll just ignore that. We'll use the lower levels. Okay. And then we're going to, on the call wall side of things, what do we say? Like three big call sticks out to me at 385, 395, let's call it. 385. Okay. Call wall and 395. Okay, so what have we just done? Ready for this? This is pretty cool stuff. So we're going to look at, let me just do this really quick. Okay. So what we've just done is we've mapped out critical levels on the monthly expiration, right? So options have weekly, daily, monthly expirations, but the monthly is the big one. It's where a lot of expirations happen for options. Now, if you're not an options trader, don't worry. It still matters. This matters a lot to the gold traders out there. This is going to show us massive areas of interest on this chart for GLD. Now, even if you don't trade GLD, it is applicable to gold spot price. Check this out. So at these major levels that we just mapped out, we have significant support around 360 and 350, and we have significant resistance around 385 and 395. How do we know this? Well, we're not speculating just because a candlestick pattern took place. We're using the options market to spot where significant amounts of open interest on the options market is visible. Okay. So when we're looking at gold here today, what we know is that most likely there's a lot of buyer interest down in this area. And likely we would see some kind of support come into play there. Conversely, if sellers come into contact with these areas, they're probably going to find resistance. Now, to give us a representation, that is about 3% lower than current price, 3.25 on both sides. Okay. So let's equate that to gold. Okay. So 3.25 in both directions. 3.25 is right here. Coincidence? That 4,200 level is massive resistance. Okay. That is your resistance point. 3.25% lower is going to put you just below prior support. Okay. So the way we just confirmed, I hope you guys caught what we just did there. We just used the options market to confirm our theory that we have significant support here, not just technical analysis support. We have the options data confirming that those are massive areas of interest. Does that make sense? Those put call wall breakdowns are something new to my channel that I have not been doing for a long time. I've just recently, added that feature in that tool. Let me know if that is helpful, if that makes sense, if that breakdown, if you followed that, that was useful to you and you would like to see more of that sort of stuff in the future. If you could just give me a 1 in the chat right now, just drop a 1. That just lets me know visually that that made sense. So what that tells me is that all of this is mostly fair game. 3.25% in either direction in the next few weeks, right? That's kind of, if you're a swing trader, that matters tremendously to you. You're like, okay, so the range is here and here, right? That's where big money is sitting. Nick, it's great, but we have a tutorial actually. It's on the website now. If you want to check it out, if you're an Edgefinder user, go to A1 Trading real quick plug for you. Head over to tutorials. I think it's in here. We may not have added it to this list yet. We definitely put a video out. I filmed a video and Julie created a guide. I just need to be able to find it. Anyways, this is where to go. We'll have it added here shortly. But if you go to Edgefinder tutorials, you can browse through our entire library of different tools available within the software and how to use all of it. So, and that is of course free to explore if you're considering getting Edgefinder. So anyways, that's the way to read gold's kind of options data right now. The other thing with options data for gold here recently that is interesting is that if we are looking at volume, massive bearish volume. Now, what does that mean? Does that mean that gold's going to fall, or does that mean that gold's going to rise? So I would generally look at this and I would say this is more of a likelihood that we are getting closer to a bottom than to a top. Let me explain. When everyone buys something, what happens to the price of it? It goes up, right? When everyone is buying puts, typically what happens is the premium paid on those puts, which are bearish options, skyrockets, right? If everyone bets something is going to go down, the price to bet that something is going to go down obviously gets more expensive. So a lot of times it is a contrarian indicator. So this is what we would refer to as kind of a crowded trade. The bears are very crowded on the short side of gold right now. And so I look at that and I say, okay, that is a bullish signal. However, it is worth mentioning that's not the only thing that I use or look at when determining if I want to place a trade. So I use a combination of many things, which is what Edgefinder is, kind of meant to do. It's a specialization tool where it scans a bunch of stuff: economic growth, crowd sentiment, technical readings, institutional activity, inflation, jobs data, etc. So I do potentially like the upside for gold, but as I've been discussing, I'm waiting for a break. Now, on the 4-hour chart, we've got a kind of more local level of resistance, this 40-60 level. Where I get really interested in gold bullish setups would be that level that we just discussed. A break of 4,200 on the daily looks massive. Like that looks like a long-term bottom probably is forming on gold, in my personal opinion, if you get the break above 4,200. But we're just not quite there yet. So I am watching gold close. It is top of mind for me right now. And I'll see where that takes me here. Okay, so I also wanted to share something with you guys. So we've got, let me just, one second, guys. So real quick, I wanted to just shout out our sponsor here that you can see above the screen, because I want to tell you guys about a webinar event that they're actually doing tomorrow. I'm going to be on there with them. So Prop Shop Trader, if you've never heard of Prop Shop Trader, they are our newest sponsor on the show. And Prop Shop Trader, if you are a gold trader, specifically if you like futures trading, or if you're an equities trader, this is I think this is the first prop firm that we've worked with that actually offers equities or stocks on their platform. So real quick, I just dropped a link in the chat. If you want to check this out, register for this free event. We're going to be doing a webinar tomorrow going over Prop Shop Trader and how traders who are specifically futures and equities can scale up big time with their platform. One of the coolest things about Prop Shop Trader is they offer a tremendous amount of room for scaling up an account size. They allow you to actually have up to 20 accounts within their one platform, which is really nice for making it so that, if you build that credibility with a particular prop firm, the ability to scale is a really key feature for a lot of traders. Being able to, not just stack a bunch of different prop firms and starting over every time you go to a new place, but rather build and continue to build within one is kind of a cool feature that Prop Shop Trader makes more accessible to skilled traders. So if you are somebody who is looking to get funded, whether it be now or later, and you use or you trade futures or you trade equities, if you trade gold, if you trade Nasdaq, if you trade S&P or ES, right? Whatever you trade on that side of things, join us on this webinar. It's happening tomorrow. It's going to be an awesome little event here where we're going to just go over, myself and the CEO are going to be discussing all the different things that they offer. We'll get some questions asked on how traders can take advantage of this. But if you're serious in your prop firm trading journey and are looking to take it to that next level, like I said, you can scan the QR code right there if you want to explore all the different features and join us on that webinar tomorrow. It should be a lot of fun. So there you go. With that said, I'll drop that link one more time just so you have it there. If you missed it, there it is. It is in the chat right there. Yeah, and they're going to, oh, by the way, and I should mention that if you join us on that webinar, they're going to have, as always, those sales pitchy webinars, they're going to have like some massive discounts for you. So that is the reason to attend, is explore the different products that they offer and come ready to get some really cheap prices on their stuff. So there you go. So just a quick look at stocks while we're on the topic of markets moving here and equities and futures and all that. So I talked earlier about looking at S&P, looking at NASDAQ had a nice bounce overnight, right? You had the low come in here. Look at this. We actually retested almost to the tick here, the prior lows. That was Friday. And then on yesterday, one thing that I think would be worth watching today is when you have a market that starts the day strong and ends weak, that is an interesting signal. So yesterday we had a market that started strong and ended weak. So I'm curious today if you're going to get something similar where starting strong, stock market opens up in an hour. Do we get the kind of fade into that? We'll have to see. So we'll see. Dow Jones still looking a little soft. So I am looking at a couple. I was looking at the Dow last week. I didn't like the COT report on it. Kind of knocked the score down a little bit. Let's just real quick take our top setups page and just see what else we have on the radar. Okay, so we're looking at taking off the neutral reading. Okay, So what do we have? No indices currently. Actually, Chinese stocks. I did want to take a quick look at that. I'm going to look at FXI here. I'd be looking at this one potentially to the upside. I believe we took back. No, we didn't. We did not take back the 200-day moving average. It's been in a long-term downtrend. I think that this thing actually has room to potentially keep running higher. These are Chinese stocks. The AI hype, Chinese offering cheaper AI, I think is actually an interesting story in the short term. I don't trade based off of stories alone per se, but it is still one that I think could be a short-term catalyst and get prices moving there. So I'm watching that. If I take a quick look here at China 50, where is that? Go here. This one is getting a strong reading within Edgefinder. I want to look at it. It's gotten a strong reading as early back as, when was this? July 8th or so. We started getting a solid reading on Edgefinder. It's been pretty much rocket ships for the last few weeks here. If we are looking at inflation data, nice and cool there. Inflation is very different in China than it is in a lot of Western places. Manufacturing's up, services are up, retail sales up, upward trend, seasonally strong period of time. Unemployment rate lower than anticipated. So I don't hate the idea of maybe taking a long stab at Chinese stocks, which is not something I trade often, but we're getting a lot of synergy there on our readings, and so I'll keep an eye on it. Check gold. We just did gold, but we will take a look at it again in a moment. Looking at the dollar here, dollar index is continuing overall to defy this support zone. I was looking at this for a possible sign, like, okay, maybe we break lower. Actually, I think I got stopped out on my pound dollar trade. I almost certainly did. I had a pound dollar long position. We are out of that. Did not work at all. Cut the trade out of there. The idea for me was, all right, we have broken through major resistance here. And again, I'd take that trade again in a heartbeat. There's nothing wrong in my view with that trade. It just didn't work out. And so it's on to the next. Dollar has come back stronger than I thought it would. I thought we may be seeing a little bit of follow through to the downside, but no good fortune there. We have continued to essentially see dollar rally back. So am I going to take another stab at pound dollar long? I might. Let me just look at something. British pound still getting a solid reading overall. Services PMIs slightly upbeat. Retail sales solid. Consumer confidence a little bit better than expected. Unemployment rate lower than forecasted. So, I mean, I'm not opposed to maybe trying again on pound dollar. The next spot I might be interested in an attempt. If I get my fibs out, probably this 50% level looks decent. I could potentially try again on pound dollar. If we get another flush today, I'm not opposed to maybe trying again on the long side. So let's just see. Yeah, I mean, if I was to take this trade again, Benny, please don't spam the chat. Makes it hard for me to read what's going on. Nick, have you already gone over gold? Yes, I have, but I'll do it again. Don't worry. I can always ramble about gold for 15 minutes. I do it every day. So pound dollar, I do like the idea of potentially re-entering this trade. So again, this trade did not work out. It's all good. It's on to the next position. If we get a move down into this 50% retracement, I like this for maybe another stab. Crude oil. Yeah, let's look at crude oil real quick. We'll just pull up oil. Look at this, pushing higher here today. I'm surprised stocks are holding up. Did we get some? We might have gotten some decent earnings this morning from somewhere. And I have to say, man, I want to be long oil. If I didn't use a system, I would probably be wanting to force trades on oil right now. But I have a system, so I don't force trades. But oil, technical reading improving. But this is what I mean by a systematic approach. So when I look at a chart can look really pretty. It's like if you're really attracted to someone, but their beauty is false, right? Like, I don't know, if you really like a girl or a guy and they look great, but the inside is rotten, right? That is what technical analysis can sometimes look like to me. Okay. So you meet this guy or girl, you really like them. On the surface, they look gorgeous, but underneath, right, past the skin level, they're maybe not all that cracked up to be. That's technical analysis 101. A chart can look gorgeous. A trend line can look perfect. A moving average retest looks just picture perfect, like you ripped it out of a textbook technical analysis book from 1985, right? But that doesn't mean anything to me because technicals can be so misleading. I love technical analysis. I love charts. I do this stuff with charts all the time. But technicals are simply not enough. And I really, like, I had a coming to the Lord moment one time many years ago where I was like, wow, every retail trader and their brother who doesn't even know how to trade yet uses technical analysis to try and guess where the market's going to go. But every time I turn on CNBC, Bloomberg, and I listen to the people in this industry at the very top, none of them are talking about technical analysis. The people who are managing tons of money, you know, massive, successful hedge fund managers, they're not talking about ICT concepts or a trend line breakout. They're not talking about that stuff. And I looked at it as like, I want to trade for the long term and I want to get good at doing this. And what I found is that the people that are really good at doing this, not all of them, because there are technical only traders, but a massive chunk of people that I look up to in the hedge fund, you know, professional trading space, they are not looking at simple technical analysis alone. Some are, but most of them, what I found, again, turn on CNBC, listen to the people who manage a bunch of money. Most of them are talking about what the Fed's going to do. They're talking about business cycles, secular trends happening in technology. They are riding what's happening in AI, right? They're not just using a candlestick pattern or a fair value gap. Like that's you when you get serious, you're like, okay, pros trying to ride trends are understanding what those trend drivers are, right? They're not just ignoring. And again, I know I'm kind of blanket stating here, and there are traders who are purely technical, but on this stream, pretty much everyone who comes on here is to some capacity using something more than just simple technical analysis. We have some technical traders on here and we appreciate them, but most of us are macro traders. We keep an eye on what's going on in the big picture and try and ride those trends. So when I look at oil, I like the chart. I think the chart looks great. But how many times in my trading career has a chart looked great? I take trades and it's just a waste of time. I would have been better off not trading at all. The answer is a lot. A lot of times the best thing for me to do is to wait for a clean picture on the macro fundamentals and the technicals at the same time. And I have found in my trading that creates synergy that leads to better trade results overall for me. You might be different. I'm just telling you what works for me. So if I see, for example, a clear signal on oil, for example, let's say inflation continues to cool, the jobs market holds up, and economic data, let's say, for example, continues to, right now we had weak manufacturing and services PMIs. Let's say these flip positive. Like, let's say we have a run it hot economy. The economy's strong. You also have geopolitical uncertainty and inflation is mostly holding it together. That's like a sweet spot where I want to be long oil, because that's a economic demand is strong and we have some supply worries over here due to the Iran conflict. Like I could really see a great technical setup forming for oil in that moment. But right now, we have some softness in economic prints that's kind of got me a little bit on pause on oil. And institutions have been selling it. So that's where I'm hesitant in waiting for more of a clear picture. Maybe we get the breakout. Maybe we get some services manufacturing PMIs. I'd rather buy it up here with a good signal than buy it right here with a bad one. So that's where I'm at with it. Last thing I'll say, and then we're going to pass the show over to Alan. I promised I would come back to gold. So I already talked about it earlier in the stream. If you want to rewind and listen a little closer to that part where I probably talked for 10 minutes about just gold. So if you want to check it out over there, long story short, we mapped out the put call ratio. The put and call walls on GLD, marked out that 3.25% in either direction. We have massive resistance and we have massive support. We use the put call wall tool within Edge Finder, this tool right here. We mapped out gold and we spotted key levels. So scroll back in the video or the live stream if you want to check that out. And then you can explore that more. But long term, I like gold here. I think it's a good buy. Personally, not financial advice. Short term, I'm just too neutral. It just needs more of a sign of the bulls coming back in. Price action looks mixed. I'd love to see, for example, buyers get above this call wall. That's where I think you have, I think the options guys called like a gamma flip, where you have dealers rapidly hedging the other direction, and then you get these flushes in sentiment into one direction. So in that case, I think I'm looking for breakouts. That's the long story short. And I think that right now volatility has been real quiet on gold, so I'm just going to wait it out. I'm going to watch for the break. I don't like the short side. I do like the long side, but I only like the long side if the breakout starts. Right? Does that make sense? It's a scenario. I'm waiting for a matchup of sentiment here in order to actually take the trade long. Last thing I will say here is that if you are interested in getting Edge Finder, which is our tool here that we use on the stream, I'm just going to real quick change my screen banner here. We are currently doing 40% off for a limited time on Edge Finder. It gets you access to all of our tools, the scanner that I use and our other guests here use to scan markets. If you scan the QR code right below my camera, you can get access to it for a massive discount for a limited time here. And I'm also just going to, we've got it. Perfect. Nice. Thank you guys in the back room. There's the link as well. So with that said, we have got Alan Perez taking over the stream after this quick break. So don't go anywhere. He's up next. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope you guys are having a great day. You guys have some time to spend with me. We got about an hour together. So feel free to drop those chart markups. If you have anything that you want me to go over, feel free to drop it into the chat, and I will do my absolute best. All right. So in the US, not much stuff going on, I would say, as far as data releases. We have until next week where we have some more things on the calendar. But for now, US macro seems to be quiet, and the overriding theme seems to be what's going on in the Middle East. Pound Aussie, I will definitely go ahead and take a look at that. In fact, I was looking at that right now before I got onto the show. Good morning, Sluggy. Good morning, Rabies. Hope you guys are doing awesome. Thoughts on Dow? We can talk about Dow as well. When we're covering gold, I believe Nick just covered gold during the last maybe 5 minutes of his segment, but I can definitely get into that later. So just stick around. I promise I'll get to it. Let's look at pound pairs. Yeah, pound pairs. I like that a lot. So let's go to Edge Finder here. For those that are new to the stream, the Edge Finder is basically a software that gathers all of the relevant information to go ahead and make a score bullish or bearish on a certain asset class, whatever you're looking at. It gathers the sentiment, the fundamentals, and the technicals, and it gives you a clean reading in either direction. So in this case here, to make it easy, I have only the bullish scores, bearish scores, and very bullish scores. I took off the neutral ones just because I don't want to be looking at something that's not in play, right? So you have a lot of things that are just kind of neutral hanging out here. So I'm going to take those off. So I'm going to deselect those. And if you look at the chart or the screener, you can see that the pound pairs, the pound basket as a whole is doing quite well. Pound dollar getting a very bullish reading, pound Swiss. What else do we have? Pound yen getting a bullish reading, pound isolated. So if you're just looking at the pound, like for example, the pound futures, not including US fundamentals. It's getting a bullish reading on its own. So that's really good to see. So I like that a lot. So one thing that I'm looking at, pound dollar, big run up that it had at this point here. And then, it just kind of kept going. It was up like 1.1% or 1.2% in a single day. And so I was like, wow, this is good. I want to get a pullback if I can. And it seems like we're getting the pullback now. I have this technical level here. So these are the two things I'm watching. You have this one here, which was support before, and then this was resistance here. So in fact, let me go to a 4-hour time frame to make this easier to see. Okay. So this level here, and this is just horizontal levels that I have marked up, nothing crazy. And again, technicals are subjective, so keep that in mind, right? These levels that I'm showing you are not the levels, right? These are just my personal opinions. But this will support here once, twice, 3 times. You broke out here, right? And then you traded back into it. This was resistance. And then you saw some support here again, right? So that's kind of what I'm looking at. So I'm either looking at this upper level or this lower level here. The upper level I like because this is where the 200-day moving average is, right? And so we had a lot of buyers and sellers kind of just fighting it out here for some time before pound USD traded higher. So this is the first level of defense I have in mind, with the other one being this other level, which was, again, support, turned resistance, and then back into support. So let's measure this out with a fib and see which one I prefer the most. Let's see. From low to high, the 38.2 is this one, and the 50 and the 61.8 is right here on this other level, which this other level, you can call it the golden zone. The golden zone is usually in between the 50 and the 61.8. So I like that level a lot. Let me do something else, something very, very basic. I'm just going to put a trend line and see how that looks as well. So from here to here, see, like the reason why technicals are subjective is this. I might rant on this, so bear with me, guys. If you are looking at a trend line, I have this trend line here, but someone else could say this is the trend line, right? And if this is the trend line, then we have already broken and we are now bearish per se, right? So that's why they're subjective, okay? So this is valid. This is also valid. To each their own. So I have this first level of defense here lined up, this 200-day moving average. We'll see. My only concern is if you do have sellers overtake this 200-day moving average and we take it lower from here, does that mean we are now bearish from a technical perspective with the 200-day? I would say the 200-day is likely widely accepted or used, whether you are a retail trader or an institutional trader or whatever. The 200-day moving average, everyone can see that pretty well. So I'm looking at this first level of support. If you do get a break lower into this other level, this lower level, and you still have the edge finder sharing a bullish reading on pound basket, then I'd be happy to take the trade. But I'm also happy to take the trade here. So we'll see. If buyers step in and this holds, then I'll take a stab at it and to the long side. But I'm watching pound dollar. We got the pullback, which I like to see. What else am I watching? Aussie dollar is actually getting a bullish reading as well. You are seeing us hold this level of support and this 200-day moving average as well. I bring up Aussie dollar because someone asked me about pound Aussie. And so when you're trading currencies, you're trading currency pairs. And so for you to get clean moves, you have to either trade a super strong currency against a super weak currency or vice versa. You don't want to trade two strong currencies because you most likely get something price action that is flat, sideways, not the best, right? So if you look at pound Aussie and you look at the edge finder and you see that the pound dollar is getting a bullish reading, but you also see that the Australian US dollar is getting a bullish reading, well, may not be the best, right? We may just chop around into pieces here. And I'm actually glad looking at this chart now that I didn't take the trade, because one thing that I was waiting for, we had a pound Aussie bullish reading, but one thing that I said, if you guys remember, we need to clear this level of resistance and this 200-day moving average. So I'm very happy that I didn't jump the gun and I was patient and that I didn't take the trade, because now it seems like we are just rejecting this level and continuing lower. And who knows, maybe we start trading in a range here, right? Maybe this is something that we do with pound Aussie. So I'm not looking to trade that. I'm curious to see what the score is in pound Aussie. Let me go to pound Aussie here. Is it even getting a score? No, it's probably neutral. That's why. Let's see. Let's clear this off. Neutral. Pound Aussie. Neutral rating of 2. And it was at one point getting a bullish reading of like 8 or something. So not something I'm looking to entertain. I'd rather do pound US dollar, if I'm being honest with you guys. Another thing that makes the pound USD trade so tricky is the DXY. The dollar here seems to be catching a bid at this upward trend line. Again, it's subjective to my eyes. Upward trend line and this level of support here, this 100.5 area. It seems like we're actually, tapping into this level, and we are now trading upwards. It seems like the bulls are taking it over from here. You had two levels, or two technical, I guess, roadblocks that you had to overcome, and it seems like it did not pass through. Now, from a not macro, fractal perspective, if you put a trend line here and you go to a 4-hour, then you can make the argument that on a lower time frame, you still have DXY in a bearish trend, right? So depending on who you ask, this is either bullish or bearish. Technically, this is what I'm looking for then at this point. If you get the break above this level here, this downward trend line, then likely than not, you probably are finding your way back into that 102 level of resistance. And then at that point, it's just a matter of, do we break that level, continue higher or not? That'll probably be contingent on the price of oil, yields, and rate probabilities. That's kind of what I'm looking at from a technical lens. And then if you get this rejection here and you break below of this upward trend line, and you actually break below this 100.5 level of support, this very big one, then maybe you have bears stepping into the picture. But for now, I would imagine that we chop around in this apex here. Let's look at rate probabilities. I'm curious because they actually did kind of get aggressive yesterday when I checked them. So CME Fed Watch tool, we'll go to Fed Watch here. And this is a way for you to get an understanding and know where interest rate probability sits at any given time. So we'll go to, so this is July. You see a 16% chance of a rate hike this month and an 83% chance of a rate hold this month. So most likely than not, we're going to see a rate hold, right? Nothing crazy there. If you go to the probabilities tab, you can see here that now we have a 54% chance of a rate hike this year. And we're going to stay there, okay? And then going into, what is this? March of 2027, you also have a chance that we hike again, right? So we went from being 2026 was a case of how many rate cuts are we getting, to now we're in rate holds, to how many rate hikes are we getting, right? So this right there is, I'm assuming, is adding some fuel to that DXY bid. Let's look at yields here. 10-year yield, repeat up higher, 30 long end, pretty strong. Wait. Yeah, we're in the 5s. 2-year yield. Okay. This was a trend line that I had marked up. I wanted to see a break below the trend line and some continuation and follow through. We broke it briefly, but we are now back above, right? So we are still in an upward trend there. What does this mean for gold? Okay. Or what does this mean for other things, right? Well, a strong dollar is going to mean, from a currency Forex perspective, strong dollar, likely pound dollar weakness, Kiwi dollar weakness, Aussie dollar weakness, right? So if you continue to see an overwhelming strong dollar, that'll probably translate into that. What does it mean for gold and silver? Well, strong dollar means weaker gold and silver. So likely than not, if that theme is the overwhelming overrider, then you see gold probably break below this level and continue lower, right? That is if you see oil still staying sticky up there, yields sticky up there, and Fed watch probabilities or interest rate probabilities show that we are going to hike interest rates. So we'll see. We'll see what happens there. Gold is getting a little bit of a bid now. So is silver. Silver's up almost 5% today, which is awesome. So we'll see. We'll see. This trend line here is what I'm watching, right? So I kind of have two roadblocks that we need to overcome. The first one being, you have this bearish trend line here. I think if we overcome that, I will need to see a break above this level of resistance right here. If I'm not mistaken, this is where you have some options, an options wall right over here. But the other one that I really need to look for, if I want to trade this for the long term and turn this into a swing trade, into a longer term, maybe position trade to the long side, is you need to overcome this 200-day moving average as well. So you have a couple things you have to overcome, right? You have to, for one, from a macro fundamental perspective, you need to see the data showing for or in line with rate cuts, and then you need to see that being reflected via yields and CME Fed Watch. And then from a technical lens, you will need to see some breakouts of key levels, this trend line, this level of resistance, and that 200-day moving average. So in fact, there's actually 3 things that I'm looking for from a technical perspective. Now, will I get in without seeing all of those 3 things from a technical lens? Absolutely, right? If you start to see yields cool off, maybe you see some tensions ease in the Middle East, and you get this first breakout, I'll take it. I'll take a stab at it, right? And then I'll just be mindful of these levels here. And then if you do overcome the big one, which is the 200-day moving average, well, then I just trail stops and let this thing run and run and run until it gives out. So that's kind of my thought process on gold. I think to Nick's point there, I think I wouldn't short it, but I would long it. Makes a lot of sense. Max, UJ's about to break out. Yeah, what is Japan doing? UJ, yeah, so I have this technical level here, this 162 by 163 area. Let's go to a 4-hour chart. Yeah, man, let's about to break out of there. Let's see. Let's move these levels here. Look at that. Most likely going to break out here and continue higher. Similar to the gold story, but vice versa. I wouldn't long USD/JPY. I mean, I wouldn't short USD/JPY, but I would long it. You know what I mean? So I'm not going to short into this strong fundamental driver here, which is strong US dollar right now. Oil's bid up. Rate probabilities are shifting into a hiking Fed. And you also have a rate differential that favors the carry trade to the upside. I wouldn't short into that, but I would buy into that. So if we get somehow, who knows what it is, whether it's the war in the Middle East fully coming to a stop and rate probability shift dramatically, or Bank of Japan just injects a lot of intervention, who knows what it is. But if for some reason you have some kind of a pullback in USD/JPY to, let's say, for 3.5%, 500 pips lower to 157.8, 158, I would buy that. I would definitely buy that. So we'll see what happens. I think it's probable. I just don't know when it could happen, right? We'll see, though. We'll see. I would love to be a buyer of USD/JPY, and maybe I just buy the whole basket. Like if you look at JXY, which is the Japan Yen Currency Index, kind of lines up with this 200-day moving average here at that 64 mark. So if you somehow get the yen get so strong to tap into this level, I might be buying pound yen, dollar yen, Aussie yen, Kiwi yen, the whole basket. So we'll see. We'll see. Let's see what else we can look at here. Let me look at the chat, see if you guys are looking at any other pairs or assets. Oil is pumping. Yeah, what's oil doing? Oil. Oh my goodness. All right, this is my thoughts on the oil, guys. I made a chart markup here not too long ago. And in fact, I'm going to drop the link to the Telegram channel one more time. You guys can go ahead and join. Free analysis every single day, 2 chart markups, polls every single day, discount codes, bonus content, everything that you can imagine in the Telegram channel. I made a post about it here not too long ago about oil. Was it yesterday? Pretty sure it was yesterday. Let's see here. No, it was Friday. Was it Friday? Yes, Friday. This is the level that I'm watching, right? This 85 mark. This was the floor whenever the stuff was hot in the Middle East. This was the floor. Every time you got into this level, you had buyers step in and take it higher, and you were trading within this broader range of 119 and 85. You got the floor broke. The floor broke on June 12th, and you had some continuation to the downside. This was largely due to the ceasefire that was established. A lot of optimism as far as the war ending. Then you had buyers step in over here, and now you are back at that floor. So this floor was once support, possibly turn resistance as we trade into it. This also lines up with the 61.8% retracement level if you put this from the high to the low. So this would be an opportunity, and I would say the opportunity for gold bears to step in and take this lower if they want to. If they fail to do so, well, then this level failed to become resistance, and that key 61.8% retracement level did not hold. And you likely see oil back into this range of whether it be 84 to 119, depending on how bad things get. So I'm watching that for sure. And in fact, if you get oil break back above into this range, gold likely falls through the floor. Gold falls, dollar rises. That's what I'm kind of thinking about oil. So this is it, guys. Watch this chart. If you're watching any chart today, this oil chart right here and this key level is what I would be watching. So we'll see. What I'm saying is, too, what I think is like this pullback here, right? I wouldn't say it's a bad thing because you did have a one directional push to the downside. So some kind of a pullback is necessary. However, from a technical lens, if you do overcome that 61.8% retracement level, then it's no longer a pullback. It's just the trend changing. So that's my thoughts there on oil. Many bought gold with debt for 3 years straight with no worries. Now it's time to release their gains or accumulate more losses over time. Interesting take. The Forex market seems to be boring this week. I would imagine, man. It's, we have no U.S. data this week. We had unemployment claims Thursday, and that's about it. But everything is just pound, Aussie, Eurozone. And that's pretty much it. We had some Canada CPI yesterday, which came in cooler than expected as well. But for the U.S. side, it's pretty quiet. It's pretty quiet. And, I think the overwhelming theme right now is going to be the Middle East, which let's talk about the Middle East. Anything interesting? Oh, look at this. 7:44, so about 10, 11 minutes ago. 2 oil tankers laden with Saudi crude make U-turns in the Red Sea. Uh-oh. What else are we seeing here in the Middle East? What's popping off over there? Iran officials began meeting with mediators in Pakistan. Whatever. I got to see a photo of that guy. Whoever these mediators are, I need to see them in person. German economic sentiments. And that's about it. So really nothing much has changed. Again, these headlines now, they kind of mean nothing to me. They kind of hold no weight. They say good things. They say bad things. I look at the price, right? The market is very, very smart and very efficient. And so they'll price in what they think is true. And at the end of the day, I'm trading against the price, not the opinion of financial juice or whoever of these people, right? Because they all have interests as far as making their domestic populations happy, right? So the U.S. is going to say things that wants to make Americans happy, and Iran's going to say things that wants to make them happy, and so that's conflicting. Non-existent mediators. They're non-existent, man. They're AI. It's all AI, man. All right, let's see what else we can. Bitcoin. Yeah, we can talk about Bitcoin. Let's see what's going on there. It's getting a little bit of a pop. In fact, at one point in time, I said, I want Bitcoin to trade into this gray area so I can ultimately short it. And Bitcoin was kind of quiet there. And, I've never traded Bitcoin. I never really liked Bitcoin. So I might short it if we tap into this level. If we get to that 200-day moving average, I mean, you can see here, this was clean resistance at one time. When was this? May 10th? So if you get a Bitcoin trading to this level here, this 200-day, and it rejects, I might short this thing. I might take my first Bitcoin trade, guys. You guys will see it live. We'll see if it works out. Will I have a 100% win rate or a 0% win rate on Bitcoin? We'll see. But yeah, I do like this to the short side. I also do like it too if yields across the board are rising. So what's going on? Canada's yields are dropping. Europe's rising. Kiwi's rising. US is rising. Pound's rising. Aussie's up there as well. Japan. Is Japan not on this? I don't have Japan on here. I thought I did. Let me add JPO2 yields. That's what they're really sensitive to. Bitcoin's really sensitive to what's going on in Japan. Japan's just way down here. Okay, let's see. Japan. I mean, the 10-year in Japan is just trading higher, man. 2.7%. and I feel like it's not talked about. It's just doing its thing. Yeah, man. I'd be a shorter Bitcoin. I'm gonna put an alert right here. I'm gonna put an alert right here. And if I tap into that, I'm gonna short it to 50,000. That's kind of my target there. It's also like long from a technical perspective, long-term support, I would say 50K support here, resistance here, resistance here. I like the level. So thank you for bringing that to my attention. I'm actually curious too. What is Bitcoin doing on the Edge Finder as well? Let's go to crypto only. What is Bitcoin doing? It's neutral. Okay. Yeah, it's all made up, Sluggy. Pound Aussie long still alive. They are not, man. So let's go to Pound Aussie. I'm gonna go over this one more time here. Pound Aussie on the Edge Finder, getting a neutral reading. So for those new to the channel here or new to the live stream, the Edge Finder gathers the technical, sentiment, macro, everything that is relevant for a asset's direction or can influence an asset's direction. Gets all of them, compares it against each other, and gives you a reading. Right now, it's neutral, so meaning it's not in play right now. If I go to Pound Aussie, I talked about this. I really needed to see a breakout of this level resistance and this 200-day moving average, and we are actually rejecting it to the downside. So not looking good. I'm glad I hesitated. Yeah, so we're likely not just going to be trading in this range, I would say, with Pound Aussie. And Pound Aussie was getting a bullish reading of like +8. So the macro score, the Edge Finder score also dropped with it as well. So I have no interest in Pound Aussie. I like Pound Dollar. But if you have overwhelming dollar strength, I probably wouldn't take that. So we'll see what happens here, where you have this cluster of candles where you had buyers and sellers fighting it out. You also have the 200-day moving average. If we breach this level, then my last look to buy pound would be at the 61.8, which is this level here. I'm not in a position, by the way. So just for transparency reasons, I'm not in a position, but I'm looking to be in a position. So 61.8 would be my last kind of floor to see if I'll take an attempt at it, but we'll see. I have never traded Bitcoin. What drives Bitcoin? Do you know? Listen, I'm not a Bitcoin expert either, but I do know that these big legs lower in Bitcoin were basically Japan scares, right? Japan bond market. So Bitcoin is a very speculative asset. And one opportunity and one thing that a lot of people do, or let's just make it simple. People leverage a lot of Bitcoin, okay? Bitcoin was your ticket to retirement. Okay, Bitcoin at one point was going to go to $1 million. And so you had people saying, buy Bitcoin, buy Bitcoin. It's going to set you free. So you have a lot of speculative kind of behaviors underlying Bitcoin, right? You have people that were like, sell your house, buy Bitcoin, sell your liver, buy Bitcoin. And so it's a very leveraged asset. Also, two bigger players were doing the same thing. So if you look at USD JPY and you understand the carry trade, which is basically borrow money in cheap yen, low interest rate yen, and park that into US dollar, right? For example, US bonds that are paying a higher yield, essentially risk-free, guaranteed. You just collect the spread between the yen and the US dollar. Well, people were doing that as well with Bitcoin. Bitcoin being another high yielding asset, maybe it doesn't give you a guaranteed coupon, but it does, the speculation was it is going to yield and give you lots of return. So people would essentially borrow money in cheap yen with effective 0% interest and move all of that into Bitcoin. And so what that did was it created a lot of leverage in Bitcoin. And so whenever you had yields rising in Japan or fears of rate hikes in Japan, that narrows the spread, that arbitrage opportunity in Bitcoin. And that's why you would see Bitcoin react very sharply to that. So right now, for example, with Japanese yields still high, that kind of gives me the green light to say, if we have another wave of fear of an unwind or something, Bitcoin can continue to go lower. So from my understanding, man, Bitcoin is very sensitive to that side of things. Now, when it comes to other drivers of Bitcoin, like again, I don't know about this, but like a halving cycle, like stuff like that, right? That drives Bitcoin. I don't know that. Okay, so keep that in mind. Also, too, here, I'm going to make sure that we go ahead and cover one of the sponsors of this live stream, 8cap. 8cap actually has something very interesting where if you trade with him, open an account with him, trade with him, and meet some requirements, you can actually get the Edge Finder for free. So I'm going to drop the link there in the chat. 8cap is not offered for U.S. residents, but everywhere else, it is free game. They also have a 20% welcome bonus for a limited time. So definitely go ahead and check them out. They are a reputable broker. Okay, make sure it's the right firm for you. Terms and conditions do apply. But again, if you're looking to make the switch, you don't like your current broker, you can knock out two what's the word? Two birds with one stone. Get a new broker, right, with a good sign up, and then you can also get the Edge Finder for free. So go ahead and check them out. I think they offer everything. I think they offer CFDs and maybe stock CFDs. I don't know, so don't hold me to it. But check them out if you're looking to get a broker. Let's see. Anything moving though? Gold and silver are still bid up. Oil is trading higher today. Let's see. NDT. They forgot gold mining costs only $1,500 an ounce, and they are so lazy they bought gold above 4,000 instead. Bitcoin to me, I think the appeal or the advertisement or the pitch was it's like super safe and stuff like that. But you hear about crypto wallets being stolen all the time. And I would imagine with advanced AI, it's probably more prevalent now. So yeah, I really don't see the Bitcoin appeal at the moment. Maybe that's just me. Maybe I'm not doing enough research, but with Bitcoin, not really a fan, I would say. And I'm looking to short that thing if we get into that 200-day moving average, and I'll target 50K. And we'll see what happens there. Let's see. Dollar CAD catching a bounce. I wanted to buy this at this level here. It's 1.395. Let's see what we're looking here. Maybe we reject this level here and we continue lower, and then I can get the pullback. Or if you get dollar strength back into the picture, I can just buy this V-shaped recovery and take it to the upside. So kind of iffy with dollar CAD. I'm really iffy with a lot of things. Like with pound, I kind of hesitate too, just because with rate probabilities rising, yields rising, the oil prices rising, I don't want to ignore those themes. If those themes do stick and stay, then the obvious trade is just long dollar. And so in that case, I don't want to go short or don't go long the pound, and I would likely just go long USD CAD. So it's kind of what I'm looking for here. I want to go long USD CAD either way, but ideally, the more discount, the better. But if this is the discount, then I have to accept it and wait for an entry here. Stock market. Someone asked me about the stock market earlier. I think it was a Dow. Let's see. We have. Take this off. Indices only. All neutral. All neutral. Nasdaq, Russell, Dow, S&P. All of the U.S. indexes are neutral. Yeah, I'm not really going to touch them. Let me look at Nasdaq. Okay, Nasdaq caught a bit at this level of support, though I wouldn't buy it, to be honest with you guys. I wouldn't buy it. Similar to USD JPY, I would rather buy it at a bigger discount if I get the discount. So if something happens to where Nasdaq falls to this 200-day moving average at 26,000, that 10% drawdown mark, I would like Nasdaq. Let's see S&P. S&P is relatively strong though. It's benefiting from the rotation trade, so that's looking good. Similar situation though. If I can get a pullback into the 7,000 mark, which is I think I saw that was 6%, 7% away, I would like to buy S&P as well. I wouldn't short it though. Under no circumstance would I short the stock market, because you could have an environment where it just slowly grinds higher, and then that's just a death by 1,000 cuts. DXY, please. I'm looking for 100.75 today. Today, let's see, where's the 100.75, man? That's like right over here. Well, I hope your wishes come true, man. You do have this level of resistance here, this bearish trend line here on a lower time frame, so take that with a grain of salt. We will see if this holds. If it holds, then yeah, maybe you do get to 100 or 100.7. I think you just trade within this wedge here, honestly, until you see um, more conviction, But for now, I think DXY, everything Forex related, will likely be just very slow, just because you don't have much macro on the US side of things. You do have some other things going on in other parts of the world, and so maybe you can trade the miners. But for the US, it's pretty quiet calendar. Gold pushing down to 4,000 again. Let's see, gold. Look, in the last 4 hours, gold hasn't done anything. In the past couple days, gold hasn't really done much. Like, to me, this is an insignificant amount of movement. Now, if you're on the 1 minute chart, I guess this could be scary, but I don't look at the 1 minute. I look at the 1 day. And for the past couple of days, let's just measure this out right here. For the last 8 days, gold has done absolutely nothing. So I'm waiting for a breakout above or below, and we'll see. We'll see. My bias is to the upside, though. I'll be honest. My bias is to the upside on gold. DXY, same thing. Up or down, it can go either way. I know that's the boring response, but it's contingent on oil, yields, rate probabilities. Right now, it seems like the rate hike story is overwhelming, like winning. But we'll see. We'll see. We still need to see what goes on with Hormuz, if anything changes on that side of things. But if nothing changes, DXY to the upside. If you get the breakout of this level here, then you would get to 102. And then from 102 and on, it just depends on how strong the rate hikes are. It's all about the Middle East. I agree with you, Jeremy. You had everything pointing at a softer dollar. You had the softening NFP report. You have CPI and PPI pointing lower as well. You had a lot of things pointing at dollar bearish. It should be bearish. However, with the oil story, right? If oil stays elevated for too long, it erases that PPI. It erases the CPI. It takes all of that away. So oil is a direct input to inflation, right? Some say it's a leading indicator. We have lots of lagging indicators, but they say oil is a leading indicator, and it is true. Oil was down in the month of June. You had trending lower oil prices, and that translated into cooler inflation prints. And so now you have rising oil prices that can translate into higher inflation prints, and that would wipe away the previous things that we saw in June. Alan, have a look at Euro Kiwi. Not really sure about Euro strength, but the price is rejecting some weekly support. All right, let's look at Euro Kiwi. Look at that. So this seems to be a range bound pair. You're below the 200-day moving average. Let's go to the edge finder. Let's untick this. Euro Kiwi. What are we looking at? Neutral reading. To neutral reading. Let's see currency strength today. Kiwi's low. Yeah, it's pretty flat today. Both of them, Euro and Kiwi. I don't know, man. It's a neutral score. If I had saw a bullish score on Euro Kiwi, I would take the trade all day. Just because this seems to be like a very range bound currency. It seems like you're at the lower end of the channel. Listen, man, if it's your thing, right? Risk defined, not financial advice. Risk defined, buy here, stop below structure, and see if you can tag into that 200-day first. If you overcome the 200-day, then maybe you can tag this to, what is this? 2.02, right? But not financial advice, of course. but this is a mean reverting currency. It seems to be chopping around, and you are at a relative discount if you're considering the recent consolidation period. Yeah, we'll see with PC how that comes in, if that changes anything. I'm curious myself. Let's see. We got a couple seconds here before I have my friend Marco here join me. I think we covered it all, though. Marco, good afternoon, man.
Hello.
How's it going?
Pretty good. Pretty good. What about you? Are you doing well?
I'm doing well, man. I'm looking at pound dollar, looking to
Okay.
see if it's giving me that pullback opportunity.
Mm-hmm.
Right now, you have the pound basket is still getting us a bullish sign on the edge finder, which I like to see that. So buying the pound basket seems like a good idea. Pound dollar, I like. However, you do have a kind of probability that you do have some stronger USD coming to step into the picture. So if that is the case, I would imagine pound dollar gets a beating. Euro pound looks kind of good as well. I would like a pullback into this level, honestly, Rev. I'm answering your question here. Euro pound was getting a bearish score. It's now not getting a bearish score. I think it's neutral. And it's all the way extended to this level of support. So I would wait for some kind of a pullback to go short euro pound. But I'm looking at pound dollar, man. You have the 200-day moving average right here. This level of support. If it fails, this would be my last kind of chance to buy pound if you have buyer step in right here. The reason being is because this is the 61.8% retracement level. So if you fail that one, then obviously the trend is starting to shift there. So I like pound. Again, today you have oil prices rising. You have yields rising, the 2 and the 10. I don't know if you saw this, Marco, but CME Fed Watch probabilities, you now have a 56% chance of a rate hike this year. And the possibility are more swayed into another rate hike after that, going into 2027 of March. So that's kind of like disrupting my dollar bearish case, I would say. But again, I would need to see something more drastic. Like I don't want to jump the gun here because you still need to overcome this level here on oil. If bears step in and take it lower, then that eases rate expectations. But if bulls really do take over here and you see oil higher, then likely than not we do actually see those rate hikes, because then the inflation prints will translate to that higher. So I'm just waiting on this thing here, if I'm being honest.
Yeah. Do be careful with the pound dollar, because it seems to be a case of buy the rumor and sell the news because of the political situation in the UK. So pound USD has been a rock star pair to buy, and I did make some pretty good profit. But right now it looks to be, if you can just flip it back to GU, it looks to be done. So yeah, it looks to be like a huge explosion up when you had the rumor of the new PM in the UK, who's supposed to be better for the pound, and then you had sell the news when he actually got elected, I believe. So personally, I wouldn't look to sell the pound, but I'm definitely getting more and more bullish on the US dollar. I think the story is gonna be like yesterday we talked about it, and I was leaning towards a bullish dollar. Now I'm pretty much looking to commit. So I'm looking to play it through USD CAD, buying USD CAD. That seems like a good option to me. It's already going up a bit. And we did get some news today that the US has put a 50% tariff on Canada.
I saw that as well. Yep.
Yeah. Although I think the case is that the markets are saying like the tariffs are probably going to be revoked because the previous tariffs got challenged. So why wouldn't the new tariffs get challenged as well? That's why the reaction is pretty minimal if you look at USD CAD. But what do you think? So the classic move on USD CAD with the US slapping on 50% tariffs, would it be bullish USD CAD or bearish USD CAD?
I think if you look at everything that'll influence USD CAD in either direction, I think you have a lot of box more ticked off for the upside. Like like everything is kind of pointing that direction. Whether it be the tariffs, if they're true or not, whether it be the new rate hike probabilities in favor of USD CAD going higher. If you have you have an oil price that breaks above that 85 mark and it stays there, and the inflation prints start to come back hot again, that's going to be bullish USD CAD. I think there's a net I would say the net effect is probably USD CAD to the upside. It's just a matter of, do you buy it here or do you buy it down here, right?
Yeah.
You could if you want to like guarantee an entry point and don't miss it out, you could do a small percentage of risk there and then have an open mind to do another one here.
Yeah.
You can get in the initial one, and if it just keeps going higher, then fine, you just make less. And if it comes lower, then you just get filled for a full position. In either direction, I think you can't really lose. But that's kind of my thoughts on USD CAD. In fact, Marco, I might even do that myself, to be honest with you. That makes a lot of sense as I'm saying it out loud. So
yeah,
right now the drivers are pointing in that direction. Like this, come on. Like if you break above 61.8, like this is probably what I would wait for before I buy USD CAD. If you truly see 61.8 get breached through, and we are now back above in this channel here, dollar strength is the thing. Okay, that's what I would trade. In that case, probably long USD CAD, short euro. I wouldn't short pound. I wouldn't short Aussie. I wouldn't short maybe Kiwi, actually, now that I think about it. Maybe Kiwi. But that's kind of what I'm looking for. But I think it's too early for me. I'm gonna sit tight.
There is a correlation between the CAD and oil prices, or there used to be a correlation where I think the CAD went up as oil prices went up. That doesn't really seem to be happening any longer. So now it's all about the hawkish Fed, the high inflation, and the dollar gaining value.
Yeah.
But yeah, just if we isolate the tariffs, I'm not sure exactly when was the date when Trump put on the tariffs, Liberation Day. It was April 2025, right?
Yeah, it was 2025. It was around here. Yeah, I'm pretty sure it was in this area here. So February 20, April, this area. The reaction
initially.
Yeah.
Oh, sorry,
bearish.
The
reaction that we got today and yesterday, I think it was yesterday that it was announced, but nothing. I mean, very, very minimal. You know. And to your point, I forgot about that, but yeah, they did basically. Was Supreme Court said, yeah, you're not going to do that. So I think that's another reason why the reaction was very minimal and muted. But yeah, I think the bigger thing that's really driving the market, if you're looking at currencies, if you're looking at metals, is going to be just rate probabilities.
Yeah, I'm I want to take a position on USD CAD, but I'm thinking about it, and still I'm a bit hesitant. Like usually I grade it before I take it, and I write a sentence or two, and the sentence would probably go something like, I don't have super high conviction, but I kind of want to be in a trade. So that would probably be the entry reason for me at the moment. So I'm still looking for something.
Let me show you this, Marco. Something that I was looking to do. We've talked about this before. How do we escape the correlation with the Middle East? I like Bitcoin. Bitcoin's short. In fact, I've never traded Bitcoin, so this would be new for me. But at one point I had this marked off right here, this gray zone. Let me see if it's still valid first. So if I put a fib from here to here, yeah, so this gray zone is still the 61.8, the 50, and the 38.2. So I think that if we were to get a pullback into this level here, anywhere here, I would be open-minded to short Bitcoin and target 50K. Bitcoin really hasn't done a lot of much, I would say. Like, to me, the price action that we're seeing here is kind of insignificant. I mean, it's actually 14%. I mean, it's quite, never mind, I take that back. Like if I'm looking at this chart here and I would compare it to any other chart, it seems to be doing a whole lot of nothing. But yeah, maybe if we tap into this level, I'll take it lower. You have yields higher. And in fact, if you actually start to see global yields higher, I think that would impact Bitcoin negatively. Japan, still up there, right? So not good for Bitcoin. So I actually do like that trade to the short side. I'm getting close to that level here, so maybe that could be a way for me to participate without being too involved with the Middle East narrative.
That's an interesting proposition. That is an interesting proposition. Yeah, it's showing some resilience here. I'm not sure if it's a rotation out of stocks and into crypto, because we have seen that happen in the past, where you got a little bit of capital flowing out of stocks and into Bitcoin. Personally, as long as it's below the 200 EMA, I'm going to remain bearish on crypto. I think so. Let me just show you this. Let me put up my screen. Let's go to remove. Let's go to add. So if we look at not stocks, if we look at corn, previous drawdowns. So in 2021, peak to trough, 77.5%. In 2018, from the peak, 84%, and the current one is only 55. So I would say we still haven't seen that massive bear market that Bitcoin loves to do. So current one is at 54.3. I think we could go down to 40K very easily, maybe even to 30K, and then we kind of range around. So as far as I can see, we could get this, then we get flat, and then we start appreciating higher, and we get a new halving cycle. We get actually the bullish part of the halving cycle. So the bullishness would coincide with the bullish part of the halving cycle. So personally, looking at the data, looking at some past events, I'm bearish. Selling it right here actually isn't a bad idea. It's actually not a bad idea, especially if the dollar gains even more value. But I would still prefer USD CAD, if I'm being honest. Yeah.
Okay.
I don't like that Bitcoin is showing resilience. So stocks are selling off, and Bitcoin is going up. See, so here and lately, I think it's up. What is it? So 1.8 Ethereum, 1.7 per day, or in this day. So it's showing some resilience, but it may give you a good entry. I think you placed a nice box there. That would be a good entry, right?
My question to you, Marco, would be, like, for example, if I go to gold, right? Depending on who you ask, this little movement right here, right? Depending on your trading style or whatever, like some people are like, why is gold selling off today? And it's like, if you go on a 1 minute chart, it's selling off, but then you zoom out and it's like doing nothing. Like, come on, right? These are big moves in gold, but this is, to me, insignificant. With Bitcoin, absolutely. I don't have that kind of nuanced knowledge. So is this right here? Is this little move here? Is this, because me, I label it as a little move, but in Bitcoin world, it's a significant move that I should be, or am I in the right space to kind of just ignore it and brush it off?
I would say it's pretty small. It's still pretty small.
Okay.
So I'm just looking at the day by day. Personally, I'm looking for reasons to be patient, because I'm seeing all of the traders that I'm following are being patient at the moment. So if they were more active, if they were more aggressive, I would probably be more aggressive as well. I'm trying to follow what they are doing and trying to keep as much dry powder at the moment as I can. But Bitcoin is not a bad opportunity to short. So you're looking at maybe 67.5 level, something like that.
Maybe not 67.5, but I do like how it reacted very cleanly to the 200-day moving average.
Okay.
So if you can get anywhere within here, like let's say Bitcoin gets to 70,265, and by that point, the 200-day moving average is right there. I want to get as close as I can to that 200-day and just take a risk-defined opportunity to the short side. And 50K would be my first initial target that I have top of mind. Beyond that, depending on the momentum or whatever, that could change as well. But that's kind of where I kind of want to take it, is short into the 200-day, and then 50K, and then if it goes lower, then great for me.
Yeah. I think it's fine. I think it's a fine idea. And I do think the correction is going to be 70-80%. No problem. I think the correction is not done yet. And I think like MicroStrategy needs to die before the next huge bull cycle, before we go to ATH. I think MicroStrategy just needs to die, and we need to wash away all of that crap. It would be
You think he's gonna go to jail, man?
No.
No. So his company is public, and it's in financial sector, and when you're promoting it, like there's guidelines by the SEC, things you can't say, right? Like you can't promise guarantee results, or you can't do certain things that are flagrant. Okay. From my knowledge, I was listening to a interview with a gold bug, super gold, perma bull. So obviously his stance is going to be against Bitcoin, and so he was just dropping all the bombs on Bitcoin. And he was saying that Michael Saylor was basically like telling people like, man, you gotta put it all into Bitcoin. Like you gotta sell your house and put it into Bitcoin, sell your kidney, put it into Bitcoin.
And saw those videos.
If give me a CEO, if Zuckerberg was saying that, the SEC would come down knocking on his door and say, hey man, you can't guarantee returns like this, like you can't guarantee an outcome like this. And so the argument is that the same treatment wasn't given to Saylor. Again, this is just me going on this is a very specific scenario, very like against Bitcoin, but
we have a crypto president, so I'm not sure how that will work, because it would bring some eyes to maybe what Mr. Trump is doing and his crypto stuff, which is not really that. I mean, it's legal, I guess, but it's not really ethical. The pump and dump schemes.
It's a gray area.
Big gray area. I just think looking at Enron, looking at all of the companies that like Nikola, I think that was a big Ponzi scheme, and with that lady who promised blood tests, that was a huge blow up. So these crazy Ponzi schemes, they don't last. They just don't survive. And I don't think that Bitcoin goes up from here to all-time highs, that MicroStrategy survives, and that they live to fight another day. I think we need to wash that away, and I think we need to hit 50, 40, maybe even 30K. Sluggy says BTC crowd and gold crowd don't mix well together.
Dude, literally, man, like that interview, it was on Vlad TV on YouTube. That guy was draining him, man. Like he was throwing everything he could. I don't know if you know Vlad.
I do. Yeah. So Saylor was on Vlad TV.
No. Peter. He's. Let me see.
That's like basically the tabloid.
Peter Schiff.
Okay.
He's a gold bug, man. He's all for gold.
Okay.
If you should watch it. It was very interesting. In fact, I was doing work and I just had it in the background. But Sluggy, you are absolutely right. I found out yesterday that gold crowd and Bitcoin crowd do not mix well together at all.
That's pretty funny.
Someone else says, Alan, you sound like you personally know someone who sold a kidney for Bitcoin. No, I promise I don't. Peter, everything is bullish for gold, rain or shine. Yeah, man, he was making a lot of arguments. Like, it was. You got to watch it. I couldn't articulate it as well as he could.
The worst part about MicroStrategy is that there was a long period of time where Saylor was selling Bitcoin for twice the price. So essentially, you were buying the price of Bitcoin, but you were paying 2x, 3x, 4x for that Bitcoin. So it was a complete scam, right? Just not the way to do business. And I don't think those companies long-term will survive, especially in the US, which is supposed to be the most free market in the world, where only the real companies survive. And it's not like communist Russia where it's propped up by the government. So we'll see. But I think that's the next thing to happen. That's supposed to happen for us to wash away Bitcoin. And to be honest, I'm getting a bit tired of all the gold people. I would like to see gold to do something because it's always in the comments. People want to see gold, and gold is doing nothing. Like, guys, there's other things out there than trading gold. You can get chopped up in this. You can lose a lot of money. So just expand your view a little bit. Look at currencies maybe, because there's better stuff right now than gold.
I don't think they can blame us, man. Like, if you just look at this chart, what do? It hasn't done anything. It's waiting, but there's nothing to do. Like, you just have to wait, man. Like, I want it to do something as well. Don't get me wrong, but there's nothing to do. This thing is just hanging out there. I would be very surprised. In fact, I wouldn't be surprised if the candles get so small that they're trading within this little range here.
Probably.
That's gold, man. But
yeah,
guys,
I was in the same boat. So
yeah.
At one point in my trading career, I was looking at 6 currency pairs. That was the only thing I looked at. And I was streaming with Nick at that time. And I remember Nick was talking about all these other things. I was like, what is that? I have my 6 currency pairs. I just want to do that. And it didn't work out well. So essentially, they weren't moving for like 12 months. And I made very little money, or I was in drawdown for months and months. So my best advice, learn from me, expand. Don't focus on just gold, just Bitcoin. There's so many other great things out there to trade, and you can make a lot of percentage.
I love that. I love that because the market themes are always shifting. And if you know where the attention is shifting, you can eliminate that like feeling of having to force something because whatever you prefer is inactive. I definitely want to do that too. Like maybe we can go into this is a running joke, egg USD. Going to diversify all the way. But yeah.
I did see something in the Discord, but I forgot what that was about. Yeah, I forgot the joke. Sorry.
I used to just put that into the chat on James's segment, like egg USD, and he would just to make him laugh.
Okay.
And it's really caught
like
some
the price of
there.
eggs, essentially.
Price of eggs, yeah. Egg. Okay. There you go, slug. Egg USD.
I know Ballout is looking at cocoa. So you can trade a lot of things. You can trade cocoa, not the drug, but the actual like cocoa. So there's a lot of commodities you can trade as well. There's so many things.
Oh God, these guys are going at it now. I'm gonna pivot out here one more time before I head out. Go ahead and join the free Telegram channel. I promise you would love it. Marco, thank you for the lovely conversation, man. We'll see you tomorrow. And
thank you
have
as
a
well.
good rest of your day.
You too, and I'm looking forward to tomorrow.
All right, man. Take it easy. Bye-bye.
Yep. See you. Goodbye. Okay. So let's continue with my solo segment. Let me expand the screen a little bit. So personally today, I have only 2 things on the watch list, which you may have caught if you saw my initial segment. It is USD CAD and Swiss yen. So USD CAD, I'm looking for buy setups. But again, before I take a position, I go into my journal and I write down a score. So I give a grade and I put a sentence or 2 of what do I think about the position. And for USD CAD, personally at the moment, I'm not feeling like a 9 out of 10 or maybe even an 8 out of 10. It's more of a maybe 7.5 out of 10 position. So I think I need one more confluence to go in. I'll think about it some more, but usually when you are trying to find reasons to take a trade, it's not actually the best time to force a position. The best time to trade is when there's so many things you want to trade that you just don't have enough attention. So when the screens are moving so much, when everything is flashing at you, when you have 6 or 10 currency pairs on your list and you don't know which one you will buy or sell first, that's usually the best time to go in. When you're looking at the watch list and you're looking at every single currency pair, trying to find the position, you're usually forcing a trade. So that's a good sort of tidbit to know as well, especially in stocks. I mean, for stocks, what's happening with stocks? So KRC, did I get stopped out of this one? Probably. Best Buy, Crocs. My Best Buy is doing okay. Crocs is doing okay. KRC probably got stopped out. Anyway, in stocks, that feeling is so prevalent. There was 1 week where I had, I think, 15 things on the list, and I wanted to take 15 positions. This week, I have a lot of things on the list, but nothing is moving. Nothing is moving, and the main reason is that the SPY is below the EMAs. So the SPY is below the 20, below the 10 EMA. It's a key reason, a key indicator that the SPY is flat, range bound, and that the breakouts will not work. Statistics say 75% of individual stocks follow the index. They follow the SPY or the Nasdaq. So do be careful. Sluggy says, Marco, you were spot on the GEP long idea. Congrats on that. Thank you very much, Sluggy. That was a pretty good idea. I'm really happy about it. So if you go to GU, damn, GU is selling off. Whoa. Yeah, GU is selling off very aggressively. Okay, let's just remove this. So the trade was this. And it was a signal in the A1 Discord. So if you want to join the A1 Discord, there is a link in the description of the stream. And you can use the code Marco to get a nice discount. So use the code Marco, join us. You'll get all of our trades, all of the trade ideas, all of the knowledge. And it's not just the mentors, it's also the members, real profitable traders. So Max, Sluggy, Rev, there's a bunch of people. I'm not going to name everyone, but it's real traders trading real capital, prop firms getting payouts, and yeah, it's a serious Discord. So do join us. GU had a position, bought it right on the bottom, it seems, took profit at around 1.33675. Then we had the rumor that the new UK PM will be super bullish for the currency. And then we had the news that he will get elected, or he got elected, and then we had the sell the news. So buy the rumor, sell the news. Classic. Personally, my game plan was to buy the British pound or GU once more. I was looking at maybe the 200 EMA to get in on another buy position, but this week I did pivot from being bearish on the US dollar to actually being bullish. Main reason is, you probably know, but I'm going to repeat myself. US put the blockade back on the straight. Oil is going up. Oil could very easily hit 100. Inflation will most likely go up as well. So if you look at the edge finder, and you look at the inflation, CPI, yes, the latest print was lower, but that was when the straight was open. Straight is again closed. I think we can go above 4.2%. That's going to be a problem. That's going to be hawkish. That means the Fed will most likely hike interest rates, and that will be bullish for the US dollar. So that's my current stance. I do also want to mention the sponsor of today's stream, which is going to be Ola Prime. So if you're looking to get funded, Ola Prime is 20% off with the code A1 Live. So A1 Live gets you 25% off. Now, if you look at their Trustpilot, it's pretty good. They have 2.8K reviews, 4.5 out of 5. In this niche, that's considered really, really good. And one thing that I really like is that they don't have a consistency rule. So on some account types, there is no consistency rule. If you're a swing trader, you know about this rule, and it basically screws up your whole strategy. So that's why I like Ola Prime so much. Do check it out. The link is in the comments and in the description of the stream, and you can get a pretty good discount. Okay. So let's see. Are you interested in the Swiss yen? Yes. I almost forgot. Swiss yen. Very interested in Swiss yen. The reasoning is I'm bullish on the yen. There has been an announcement lately that the government in Japan wants the pension funds to sell foreign assets and buy domestic. That basically means sell US bonds and buy Japanese bonds. So pension funds, I think they have more than $1 trillion in capital, which they can deploy. Okay. Now it's not going to be a massive rotation. It's not going to be like they're going to sell all of their foreign exposure for domestic, but maybe 5%, 10% of their foreign exposure will become domestic. It's still a lot of money. So I'm betting that the yen will appreciate. I'm betting that the yen goes up. I don't know when, but I want to buy the yen. The way you can do it is you can sell UJ, which in my opinion is going to be really, really dangerous. So selling USD/JPY is a recipe for disaster because I don't know when the yen buying will happen. So I can pay negative swaps. I can actually get crushed by swaps if I sell USD/JPY. Swiss yen, on the other hand, is actually positive swaps, but depending on your broker, it's probably going to be break-even swaps or a little bit negative. But the point is, my point is, you can hold it for 1, 2, maybe even 3 months. So taking a sell position here would be pretty nice. Now, personally, I would like to see a bit more downside. I would like to see a break of this trend line. And then I would put out the trade idea, because right now it seems that we're stuck in a range that we're pretty flat. So I want to see some sort of a confirmation to actually sell. But this trade does give you alpha without the beta. So it gives you an edge without the correlation to the Middle East. This trade should be pretty pure and not really correlated to what's happening in the Middle East. That's why I like it so much. But I need confirmation. Anyway, that's it from me. Thank you very much for watching. You can catch me tomorrow. I'll be streaming 2 segments, the initial one and the later one. Good luck in the markets, and don't go anywhere because we have Tiger coming on in 30 seconds. Thank you, and see you in the next one. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Tuesday. It is an absolute heat wave here in Kansas. We got up to 97 degrees yesterday Fahrenheit. Today we're supposed to get up to 100, which is like what, 36 Celsius or somewhere in that area for you guys across the pond. So needless to say, it's hotter than hell here. And they finally got my pool opened after it being closed for a week and a half. So thank goodness. That's all I'm doing on Friday. I'm just sinking like a submarine in my pool on Friday after I finish my day's work. That's all I'm going to do. I'm going to soak, because it's been so damn hot here. Got our AC on full blast. I actually had to wear my hoodie this morning for my other stream I was doing, just because it was so cold in here. So anyway, guys, as always, let me know if you have any specific tickers you're looking at. Obviously, Nick's got his code there for Ola Prime, just like the commercial stated there, A1 Live. Got your QR code as well for the discount of your choice there. So definitely go check that out, olaprime.com. As always, guys, if you have any questions on that, reach out to me at Trade Like a Tiger on all the socials. I try to get to them as often as I can. I get so busy sometimes I miss it a day or two at a time, but I'll definitely go over there and holler at you, rap with you, whatever it is, if you have any questions. So what have we got today? Well, it's just a continuation of the slower week. That is the U.S. data. Just not a whole lot of anything going on for the dollar itself when it comes to these high impact economic calendar events. Still waiting on that Thursday presser and the lip flapper from ECB President Lagarde after their monetary policy rate statement that's coming out, projected to remain the same at 2.4%. So that's one of the bigger things I'm watching personally. But yeah, as far as today, just a claimant count change for the pound early this morning, and that's about it. And I had to add on my medium impact events just to make it just to fill out the week. So that's kind of where we're at. We did have some pullbacks on the pound yesterday, as well as the FTSE, the UK 100. Guys, we had the new prime minister take effect yesterday. Just in case you didn't realize that, Andy Burnham did make his presence felt. Did his little presser with his new appointments. He has 5 new of them so far. So there's obviously some little bit of uncertainty, if you will. So that tends to happen a lot of times when we get a new regime or a new administration come in, presidency, premier, vice president, prime minister, whatever the case is. But he did assign already his chancellor of the Exchequer, however you say that word, John Healey, former defense secretary. He had actually resigned under Keir Starmer, so it looks like that he retained him, or brought him back rather. Foreign Secretary Ed Miliband, former Energy Secretary, Health Secretary Yvette Cooper, Home Secretary Shabana Mahmood, which she was reappointed, and then lastly, First Secretary of State, Chancellor of the Duchy of Lancaster, Minister for the Cabinet Office. My goodness, this person has a lot of titles. Louise Haig, who is a key ally and a former Transport Secretary. So those were the main names that came out for British politics yesterday. So needless to say, a lot of turnover in the UK. I think this is their 7th prime minister in the last 10 or 11 years, something like that. Crash and burn them. There you go. But, there's one stability. There's one stable piece in UK politics. You want to know what that is? Larry the Cat. So Larry the Cat is the resident mouse catcher appointed by them. He's been there since 2011. This cat lives there, goes in and out of 10 Downing quite a bit. I just think this is comical as hell, guys. He's just constantly hanging out. The photographers are having a fun time with him there. There he is at the podium. And here he is with his own little podium. There he is with his own little podium. He runs this place, guys. He's the one constant. There's one of the other prime ministers that was there for a short time. I think I saw a couple other prime ministers on these pictures. There you go. There he is inside with his little British bow tie. Come on. We got to have a little fun with this, right? Since they have so much turnover, he is the one stable piece for UK politics as it stands right now. And I think I did see one picture where he was there with, there you go, Keir Starmer and Volodymyr Zelensky letting him in and out of the house. So I just thought that was the most funniest thing that I saw when I kind of dug into the politics of UK yesterday was Larry the Cat. There you go. There you go. His little Vogue shot. So anyway, that's enough of that. Thought you guys might get a kick out of that. I know I sure did. So anyway, guys, let me know what you're looking at. Ticker wise, let's see what we got up here so far. Looking at oil currently. Yeah, let's take a look. Let's take a look at some of these top setups. Guys, pound dollar and Kiwi dollar are still my 1A, 1B setups I'm looking at. Now, I got to say, pound dollar did actually drop into that zone. But guess what? I got no trigger candle, and it just sunk right through it. Remember, I was talking about this 2-hour zone of demand right here? And I had told you that one of the things that I was a little leery about was the fact that it was in a relatively equilibrium patch of price action or kind of a fair market value area right here. So I was a little concerned about that. And as you can see, yeah, it just chewed right through it. It just never offered that trigger candle. So this is how it keeps me safe, guys. Just because it hits a demand zone or a supply zone doesn't mean I'm just going to automatically pull the trigger. What I was looking for was a bullish candle, and we never got it, did we? So I stayed safe. These are trades I used to take all the time, guys. I'd have losses on without even realizing, oh, duh, got to wait for a trigger candle. I just never got it. So there is another zone a little deeper, but it's already been touched. I touched on that one yesterday. So really the next step is probably a little bit lower. This would probably be a little cheaper anyway, because if we're doing our curve analysis from the swing low to the swing high up here, back to swing low. And I told you guys this too. I told you that zone up here is in the middle of this, the diddle in the middle spot. So that was one of my hesitancies. So at least this zone down here is actually in more of the discount area. So that's going to be my new target for pound dollar, since I did not get anything here. And I'm not going to trust this zone because it's already been mitigated back here. It's already been touched. But I'll still leave it there just to see if there's any remnants of unfilled order potential below that swing low right there. But for me now, it's all about this demand a little deeper. And this is going to give me a better discount. So I'm actually going to put a new alert right there on pound dollar on the proximal line of that demand zone and just sit on my hands and wait for it to do its thing. If it hits, great. If not, no big deal. But that's what would pull me out of retirement for this particular area, this particular swing low, swing high curve analysis. So that's it. That's what I'm going to watch on pound dollar. I'll get that saved. And then Kiwi dollar, I said, was the other one. So on this one, since we were on yesterday, we did bounce into that 4-hour confluence, that 4-hour zone. So we already obviously touched the daily from back on Wednesday, and we've went a little deeper. And now we've touched the 4 hours. So I'm just going to, and I kind of drew this up because I still would prefer to see this play like this, break and close, but it looks to me like it's trying to turn around, or at least for now. But yeah, the demand zone remains. Now this is, of course, in the middle. So it's not the greatest discount. It's not like it's in the bottom third. Okay. There's going to be another zone of demand a little deeper down that might possibly be a good one. We'll keep an eye on this area down here. But for now, just want to watch. Again, yeah, it's in the middle. But if it gives me my trigger candle, then I might have some interest. The bullish engulfing candle, the hammer candle with a big tail underneath, the VSA, the volume starting to pick up down here. That's the only way. That's the only shot. The only reason I would be interested in buying in this area, especially now that we've bought in the now that we've bounced in the supply zone confluence. But I'm going to stick to my guns on this. I still prefer that it actually break and close first before the retracement down. So can sit on my hands on Kiwi dollar, and at that point, let's go take another look over here. Yeah, so you mentioned oil. So oil, let's just go take a look over here at the top setup. So nothing but currency pairs over here for the moment, outside of the China 50, if anybody trades that. Going to the dollar, I was taking a look at this because this is another reason possibly why pound dollar just chewed right through that demand zone, is because if anything, the dollar is getting a lot of bearish volume right now. Put call ratio, high put volume. And then also when we look at I was just looking at the net options flow for the dollar. Again, quite the bearish looks. So do I want to be trying to buy pound dollar at this time? Do I want to be trying to buy Kiwi dollar at this time when the average retail trader at home is options trader is already quite bearish? Probably not. So this is just another piece. And again, Nick just added this about a week, 2 weeks ago. This is a really helpful tool, guys, for those of you that have the Edge Finder. If you don't have the Edge Finder, definitely get your copy. Again, any upgrades that he adds on, there's no upcharges for that. It's just the pay one time. He's got payment plans he can do for you guys as well if you are still looking for your copy. So these are just some little clues. None of these are the end all be all, but it's just little clues to say, hey, do I really want to get that aggressive about buying that, especially when it's in the middle of the curve, knowing that the dollar is quite bearish at the moment? Probably not. So anyway, that's that. And when it comes to, let's see, let's go back over here to top setups. Looking at some of our neutral items on the list. So there's your oil that you were just talking about. Still a +2. Mixed data. But dollar is still climbing slowly higher based off that demand zone bounce from down here. And we've got a couple new zones created right here. We still have yet on WTI, we still have yet to start tagging into those overhead supply zone confluences. But on the flip side for Brent, we have touched the daily. And I guess my box fell off. So let me get that redrawn up. This is our daily. Wait a minute. Is that? Sorry, let me go back over here. Oh, I clicked on the wrong one. Here we go. UK oil. There we go, guys. So we have bounced into the daily supply on Brent, but I don't think as of yet we've touched the 4 hours. So there's my confluence point right here, and we're just not quite there yet, but almost. So I said it before, guys. Once we bounce into these demand zones, that's really the next checkpoint for both of these. So again, WTI not quite there yet. Pull that forward just a little bit, and that's where I'd be reevaluating it. So still a little bit of wiggle room on that after bouncing into the daily, after breaking through a smaller 4 hour supply zone here, guys. So it still feels like it wants to rise. Obviously, the geopolitics, day 10 of fighting, guys, day 10 of U.S. strikes overseas, I think is where we're at now. Yeah, oil volatility, dollar firm, safe haven flows. Gold bid is safe haven, though capped by the stronger dollar. The VIX is elevated, obviously reflecting the heightened caution that we got going on over there. And our equities are a little bit on the mixed side. So geopolitics is the dominant driver right now. You're waiting for price to oil down to support and get diddied by buyers so I can Jeffrey it to the upside. Is that a tongue in cheek when you say diddied? I like that. That's hilarious. Oh gosh, that's quote of the day right there. I gotta say, McClexy, Mr. Clexy. That's hilarious. All right, guys, enough of that. Let's go look. Let's go see what else we got over here on the top setups. See if we can find any plays. Let me know, guys. I got 15 minutes. So if you got any other tickers you'd like me to bump to the top, I just figure I'll go take a look down these lists. Some of these very bullish items we already looked at pound dollar. Go have a look at pound Swiss over here. Pound is still, I think, a 60% beat rate. The Swiss is right around that same area. So let's go take a look at that. Pound Swiss. Go. All right, there we go. We got a little bit of a push up. The EMAs are in line. We got higher highs, higher lows. Are we bouncing into any overhead supplies to the left? That's going to be my question. Well, first of all, I need to reset my chart. There we go. We pushed through one overhead supply zone. We're bouncing into a former swing point, which is that blue dash line. So if we scroll over, looks like I drew that up from way back here. That might not be the greatest one at this point, but we are bouncing into this one right here at the moment. Daily, not really a great supply area in this spot here. I don't think this is just a bunch of wicks and elbows and knees and everything. Not the greatest picture. Yeah, that's just more slop. Probably the best supply zone as far as a checkpoint would probably be up here. So we still got a little ways to go on pound Swiss before we start running into any potential landmines, overhead landmines that might sway price back against us, assuming we were long for whatever reason. So I'm going to go ahead and pull this forward, and that's still a ways away from making a difference or, really worried about. But we'll leave that there and just start looking to see if we can't find any buys. Because I got the EMAs, I got everything in my favor. Alligator's mouth opening to the upside. I do have over here on the left, a 4 hour demand. No, that's a 2 hour demand zone, I think. Yeah. So I'm still keeping an eye on this 2 hour zone of demand down here at the 107.85 level, we'll call it. 107, yeah, 107.85. You got swing lows coming all through here. You got stop losses below all that. So I can very easily see a bank, an institution, can very easily see them want to come and take all this liquidity, all these stop losses down here and take them out. It's kind of their way of accumulating positions, because when price drops below here, you might get a little bit of a bounce here. You might get a little bit of a bounce here. You got this Sunday open here, might get a little bit of a bounce here, and then ultimately drop into the demand where the rest of the unfilled order potential lies. And that's where I would probably be interested in a possible buy, guys. As always, not financial advice. That's just what I'm keeping my eyes on. But the reality of this is it would take out, I think, quite a bit of liquidity. Because, again, you got liquidity here. Let me get rid of my magnet. Liquidity here, so stop losses, which are sell orders, right? Let's go clone that. You got orders over here as well. Stop losses here, which are sell orders. Because if these buyers are pushing price up, they got to put their sell orders there for their stop losses. And let's do that one more time. Definitely see some orders here on that Sunday. So if I'm a bank and I'm trying to accumulate, I'm trying to accumulate here. Okay. Accumulate here. Accumulate here. And accumulate over here. That's one potential play. And then obviously price comes down just a little deeper into the zone. If I can click on my button there, you know, this could potentially be their last point of no return. Taking out liquidity here, they're buying, scooping some up. Take out liquidity here, scoop up another position. Take out liquidity over here, scoop up some more, and then have your final order. Finish your order off down there in the zone of demand where I think we might have some decent unfilled order potential. And then they can start pushing price up and start their distribution process overhead somewhere. So that's just one play. That's one thing I'm looking at. I like to see all these swing lows like this in succession. I like how clean it looks because that's easy. That's easy to see, guys. That's easy to see where these breakout buyers are pushing price up, putting their stop losses. Pushing price up, putting their stop losses. Same thing here. Pushing price up, and they've already started their stop losses. So that's kind of a little bit of an accumulation play that I can see playing out if it's not too high on the curve. But yeah, hey, at the end of the day, we're just playing snooker. We're playing billiards. We're trying to look ahead a few balls, 2, 3, 4 balls, right? When you play 9 ball, you play 8 ball. That's just kind of my way of doing it and trying to put myself in the head of a bank, which is kind of a scary place at times. But again, they can't just place a multi-million-dollar order at once. They'll get a disgusting fill. They may get prices way the hell up here. So that's one way around it, is just by masking their orders. Gold and silver. Yeah, Steve. Let's see what else we got up here. Yeah. Yeah, I hear you. It's just me. I already have a bullish position on oil, 81. You think I should close? Well, I don't want to tell you to open or close anything. That's not what we're here for. But 81, 84. Let's go take a look at that price point for you on oil real quick. 81, 84. Okay. All right. Well, I would just say this, because I think you could still have some room to run. Now, obviously, do what you want. But if I were in a long position, here's what I see. On this 4-hour chart, I see my 50 EMA kind of crossing above the 200. This is a little bit of a death cross to the opposite side. Unless you get any resistance in this little chunk of candles here, I think you might be clear to at least get up to the daily, if not the 4-hour. So I would at least, if I were in this trade, I would be probably, I'd probably be looking personally to just either take my profits either right below the daily or right below the 4-hour. So you might have another $3.50 to run. You got the moving averages kind of twirling around. You're making higher highs and higher lows at this point on the 4-hour. What about the daily? Keep in mind, on the daily, you have the benefit of bouncing off the daily pre-war demand zone, which was the last Friday candle right before the war started. Okay, Monday, March 2nd. This was day one of oil trading after the Saturday strikes. Khomeini was killed at this point, and that's where oil started going just crazy, all the way up to 120s, I think it was, especially on the futures market. So that's the benefit you have, and this is why I've been paying attention to this demand for a while. So you're getting your bounce. At this point, you did bounce into a smaller 4-hour supply, and you did get a reaction, but then we rebased and created a brand new daily demand right here. Big, strong candles up. And I look at zone bounces like this. The higher time frames, the dailies, price just bounces back and forth between those zones constantly, just like a ping pong ball. Remember, the supply and demand zones to me act as paddles. Price is the ball getting smacked from one zone to the other. So I won't tell you what to do on that, but if it were me and I were in a profitable position like you are, yeah, I would definitely at least start prepping for the, to either sell half and let the other, sell half, let the other half run right here at just below the proximal line of the supply, perhaps you take a half position there, let the other half run. Or if you just don't want to fool with losing unrealized gains, because you could very easily get into this supply zone confluence and take everything away from you. Or just sell out of the position. Go for a single. Go for a double. We don't have to go for home runs all the time. Okay? That's the ripple effect. That's duplication in action for you. So just a couple ideas for you. But I would probably just be, I personally would just probably be out. I would absolutely be out before the 4-hour bounce, but probably even right before the daily. So I don't want these unfilled orders over here taking away my unrealized gains. Hope that helps. Dollar yen with a new high, says Shub. Okay. Are we starting to get deeper into 1986 territory? Let's go wrap with it. Let's go see what we got. There we go. Right. Oh, we broke out of our little triangle, didn't we? See that triangle I drew up? Look at that. That happens. You get busted out of triangles, and sometimes these moves can go crazy. So needless to say, the trend is up. We'll go over here to a single chart view for you guys. I think we are still pretty well neutral on dollar yen at the moment. We are at specifically 0. We're as zero gets, guys. You got a point on the technicals, point on the sentiment. You got 2 points taken away for the data. Obviously, the yen is still one of the stronger currencies, fundamentally speaking. And the dollar is tied with the Australia dollar in the basement at a 40% beat rate. Plus, I think it's a -3 if you just look at the score of the dollar incorporating everything. Yeah, -3. So -3 on the technicals, -2 on the data, and then a little bit on the sentiment. So, or +2 on the sentiment. So if we go back over here, I did want to show this real quick for you guys. Let's go back to the macro scanner. Just take a look at the data, the fundamentals. Again, we got the Kiwi at the top, tied with the yen. But again, the dollar just seems to be benefiting when you're equating, or when you're comparing it with the yen. It seems to be doing better against the yen because of the geopolitics right now. But because when you look at the dollar index by itself, I do believe it's still just kind of dilly-dally and going sideways for the most part. There's your daily. Remember, this candle right here, July 1st, that's where the first batch of U.S. data came in negative after that 100% beat rate. Big, ugly candle. And then it's just slowly kind of trickling down. But when you go back to the dollar yen, which is what you brought up, it's continuing to go up. So I just would not want to be working for the Bank of Japan right now. They're probably pulling out their 14 hairs that they have in their head. Because they cannot beat this price down. And remember, when we go up to a monthly chart, scroll all the way to the left, we are all the way back here in 1986. So now we've gotten to the summer of 1986. So, again, I posed the question last week. If they do another intervention, will it stick this time? I don't know, possibly. I wished we had a bullish reason to buy this. We just don't. It's too neutral. Nothing I can do about it. This is more of a result of just breaking out of a triangle. Now, again, I don't personally get into these triangles and pennants and all that kind of stuff that often. But there's no denying that you get breakout traders that just get excited. And so that could just be a temporary push from the retail traders buying the breakouts. It would not shock me at all to get some type of retracement from this. Or a Japanese intervention, especially because of this. It's going to be interesting when the Asian session wakes up here in about 8 hours, to see if they're going to try beating this down. This has happened a lot, guys, where we get a spike up only to get it just beat down. So I remain skeptical of that move up right now. Especially since we don't have a score on EdgeFinder. We just got that neutral rating over here. So just be careful with dollar yen. Do what you want, obviously, but I know I wouldn't touch it with a 10-foot pole. Platinum. Yeah. So Nasdaq, yeah. As far as that pound dollar, yeah. I'm going to wait on the deeper discount because we haven't quite. This zone down here has already been mitigated. This one's already been chewed through. This wick has already just went way deeper than the zone. So I don't know. It just kind of depends. Now, historically, if a zone gets pierced at the distal line of the demand zone, I'm out. I'm done with it because the orders within that zone weren't strong enough to hold. If it pushes down deeper like it has, you could maybe make an argument and look over here and say, okay, well, we did bounce into another 1 hour demand zone. Let's get that back on. So I see what we're talking about. Yeah, we do have a hidden 1 hour demand zone over here, and that could possibly be the linchpin for the push up. Okay, talking about this zone right here. I could see that. I just wish the volume was a little prettier. Now, the basing volume was pretty nice, pretty decent relative to the most recent few candles. And it did break a structure. It broke a structure that bounced into the demand zone, but it wasn't strong enough to break. So I don't know how strong of a structure that is. Yeah, this isn't surprising at all to see a bounce because that is a valid demand zone. But I would have been more excited about this demand zone if we would have broken that structure right there. We didn't do it. And we rejected hardcore. We did bounce. In fact, it closed about 50% of that expanded range candle and then retraced close all the way down. So I don't know how excited I am about that area. But is it surprising to see a bounce right now? No. We do have volume picking up. Okay, that's obviously a session volume coming in. So we'll see. We'll see which direction this thing wants to take it. We did get a break of structure to the upside. So if you're looking at this thing in context of a confirmation entry, even looking down on a 5-minute chart, lower lows, lower highs throughout here. But all of a sudden, what did we do? We changed our character. This is a change of character or a break of structure up and close above this more recent swing high. So, but we're looking at this on a 5-minute time frame. So that's a lot of noise to me. I just don't have any interest in it. If this were the picture of on a 1 hour chart, maybe. But on a 5-minute chart, yeah, it's a break. Yeah, it's a change of character. Yeah, it is trying to show a confirmation entry. I just don't think it's enough for me to get that excited about it. And then I'd have to look at a 5-minute time frame for a demand zone. And I would probably be looking at this area. That's just not enough, guys. That's only a 10 pip move. I don't know if I like it. So just be careful with it. And then lastly, platinum. Sorry, I got to get up out of here. What is platinum? XCU USD, I think. That's copper. XER. I can't remember what platinum is. I got to get out of here, guys. They're going to get on to me. What is platinum? XPT? There we go. Quick look at XPT USD, and then we'll get out of here. Sorry, James. I'm always a lagger over here. Downtrend. EMA is pointing downwards. However, you are starting to get a little bit of a series of never mind. Yeah, this is still lower lows and lower highs from the last time I drew this stuff up. So I'd be afraid. It's just like gold and silver. When we say metals, when I say golds, I'm not interested in gold. I'm not interested in silver. That really kind of translates into I'm not interested in any of the metals at the moment. There's just nothing there. I don't want to fight a downtrend. I also want to see what happens with the, Nick talked about this perfect. Here's what I'll end it on, guys. If you have not seen Nick's video from yesterday, his after live stream video, go watch it because he gives a case for gold staying down right now in the short term and a case for gold rising in the more longer term. There's your homework for the day. If you haven't watched that video, go watch it. That might help answer your question when it comes to metals. So anyway, guys, I'm way over. Hope you learned something today. We'll be back tomorrow to do it all over again. Stay safe today. And Larry the cat.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying including jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.